lots of new ideas to discuss today. Um, but before we do any of that, I mean, I would like to start with a very clear disclaimer. Um, See, guys, the Twitter Spaces is a quote-unquote gupshup platform, and nothing should be taken seriously, let alone investing on the back of this gupshup, right? I'm an absolutely independent person, not associated with any investment group or fund management or investment service provider. Not selling any paid advice, never have. And I have no aspiration to get registered or start any paid advisory service either. The only project other than what my profession um, is on the compliance side is to write or complete this book. It's been pending for about 18 months or so, little over 18 months if I'm completely honest. So um, that's the only other assignment that I'm pursuing, and I'm committed to complete this book this year, ASAP. And I will keep repeating this disclaimer randomly during the session as people continue to join, right? Um, Thank you for paying attention. And yeah, in due course, other than the questions, happy to share the both the antithesis and the thesis pointers for many of these small caps that I've never spoken about. I know there is an IPO of Mankind coming up. There are one or two peer group that are purely India-centric businesses and zero exports to US, no aspiration to sell anything outside India either. So I think they are good candidates to be compared alongside Mankind. So yeah, we'll cover all of that in due course. So yeah, stay tuned. Thank you.
Right. So, sir, in the meantime, although you have set the backdrop for the discussion, but can we start talking on the time for cycle to reverse in pharma? A monologue followed by
No, no,
then we
definitely.
go
I
to
will.
the
Yeah,
question.
in terms of the mono, I think see the telltale signs are no. So generic pharma is a cyclical sector. I know there have been few questions asked whether pharma is cyclical. So generic pharma is 100% cyclical. It will have its cycles. You can see the past 20 years of data. It's not consistent. It's not like a typical FMCG. So there is cyclicality. There will be cyclicality. This pricing pressure, the volume, demand supply, typical, what you find in a paper or a sugar or a steel commodity type sectors. Exactly that kind of cyclicality, maybe slightly lower, but nevertheless, generic pharma by definition is cyclical. And I said exactly the same on this recent BQ Prime interview as well. So Neeraj was asking me exactly this question, whether it's cyclical or structural, and I said innovator side of businesses who are genuinely so 100 companies may be claiming that they are doing CDMO, and 90% are generic CDMO. So always start with that soft signal and give them out. Out in the sense that you are generic. Although you are saying CDMO, you are basically doing a CMO service for generic. Always start with that. And then try and find counter evidences that you are wrong. They are not generic, they are innovator or NCE. Read the annual reports, read the transcripts, try and interact with network, or just jump on the earnings call, right? Most of these companies, they allow retail investors to ask questions, most of them. So try it out, but do your own research. Do not assume that just because the company is saying there are new entrants coming into the CDMO space, I would like to talk to them and see how prepared they are. There is a very famous, it's kind of, it's become a law, Peter Thiel's law. If you have read that book 0 to 1, it says a startup messed in the foundation is doomed. So I would like to see what kind of preparation these guys have done. Is it just an announcement that they are entering the CDMO space, or they've got any material concrete plans in terms of resources and capabilities? This is a real science driven business. This is not a generic that someone has created a market for you. There is a red carpet. You can walk on that red carpet at will. This is completely different. So NCE CDMO is a very rare sort of DNA, and very few businesses in India would be able to scale up to 500 crore, let alone few billions over a period of, let's say, 10 years. So yeah, definitely I see there are reversal signs on the generic side. I mean, you can look at the typical sign of whether a cyclical has bottomed out is if look at the long-term mean valuations in terms of price to book and price to sales as an example, and see where the current valuations are. And if the current valuations are nearer that long-term mean, it means that there is no froth. Um, Valuations are back to their historic lows, which is what the case was up until last month. I know prices have run up, and um, we have been warning about a recovery. No one can time an exact recovery. That's the nature of the cyclical business. But recovery was kind of imminent because this pricing pressure and this demand supply mismatch cannot stay forever. Supplies will be taken off because not every business has got the willpower or the resources to continue to bleed. So the cycle was bound to reverse at some point. In some cases, I've seen prices are up as much as, I mean, 50%. So Copran, again, it's a cyclical business, right? There is no rocket science in that business, but from 98, 99, the recent lows, it's back to 150 in a jiffy. So cyclicals, they move fast in both directions. It's the same Copran that went all the way to 350 and then came crashing down to 100. That is how the cycle works in any cyclical business. You can compare the cycles in other sectors like paper or sugar. That's how these guys operate, unfortunately. So no point chasing the momentum, that's for sure. And but yeah, there are. I'm hoping that most, if not all, but most of these businesses should deliver better numbers in 4Q on the generic side. On the innovator side, it will continue to be lumpy. Um, no 2 quarters will be similar, and so many people kind of misunderstood. I think I tweeted on Newland Labs 3 4 days 2 3 days back, right? And many people kind of uh, misunderstood that it was a panic attack of sorts. I've had few DMs already. So let me clarify one more thing. I mean, Newland was probably a good value last year in August September when I was bullish. That Spaces was recorded, and we have the recording, and this was around August last year, and price was closer to 1100 or thereabout. And I was very positive because I knew that at some point the lumpiness will reward on the other side. It cannot be negative lumpiness all the time, right? So if you look at the numbers, 2Q and 3Q numbers, very positive, right? Consistently better margins, and the stock doubled in a jiffy. Um, Next year, so I'm saying 1400 today is like that thousand of last year in terms of valuations, give or take. Next year, 1800 may be a great bargain, and so on. So the floor is rising. That's exactly what I was trying to say. What was 1000 last year is perhaps 1400, 1500 this year. What's 1400, 1500 this year will become 1800 next year. Because see, the pipeline, and Newland is the only company in India uh, who is sharing, a detailed pipeline of how many projects they have, how many molecules they have. There is no other company in India. You tell me if there is any other company in the CDMO space who is sharing the pipeline. You need guts, you need courage to share the pipeline, right? So there has to be something. They have the confidence to share that this is what we are doing on the development side. This is what we are doing on the commercial. This is what we are doing in phase three, phase two, phase one, preclinical. No other company. I mean, there a lot of people talk about Suvain is doing this, Laurus is doing this, Syngene is doing X Y Z. I've not seen any pipeline, so I don't know. So every management when I look at Wuxi, that's the reason I praise Wuxi, right? I can see their pipeline. So that's one thing that I would like to point out. And then this pharma NCE CDMO is a very difficult space. I mean, PI industries have been, so we can measure their success, right? What have they done in the last 8 9 years? They have been trying, their luck in the NCE space on the pharma side. I haven't seen any measurable success at least. I mean, Divi's Labs is another example where whatever commercial molecules they have on the NCE side, they were all gifted to them by and large. Because the molecules were already commercial, the innovator was looking for a second source. So those molecules were not developed, to the best of my knowledge, in Divi's Labs. Now they have started working on phase two and phase three very recently. So those pipeline, they will take time, and even Divi's for that matter, they haven't shared, how many phase one, phase two, phase three development commercial, and they have. They should be. I mean, what's stopping them? So what I'm trying to say is this NC CDMO space will stay lumpy. You cannot play quarter on quarter. Because if you're trying to play this NC CDMO space on a quarter on quarter basis, that's rat poison. I'll be completely honest and brutal. So that would be the kind of stage that I would like to set. And I don't want to take any questions because I want Aditya to be there, just to opine and share his views as well. Um, if anyone has got any other questions, or I'm not sure what can be discussed while we are waiting for Aditya. Is there anything where you want my opinion other than what I've just shared, guys?
Okay, we got. Can we take a speaker request, sir? In the meanwhile,
Who is it?
it's Lakshya Agarwal has sent one request.
Yeah, take it. Let's see what they have to say.
I have approved. Yeah, Lakshya, you can keep your question.
Hello.
Yeah, Lakshya, go ahead.
Yeah, hi. Thank you for this opportunity. So, actually, recently I have been started studying Doris Labs itself. So I had a doubt regarding that. Like in March 2021, I saw that they had taken like huge inventory losses, and post that also. Right now, if we see that their P price price to earning and EV to EBITDA are in like the 5 year average, like it's at its lowest. So I just wanted to know like what is playing right now? Is it the raw material pricing or what has taken like so much hit for Loris Labs? So can you paint a picture in that?
Yes, so in inventory losses, I think many chemical companies have also taken the inventory losses because the way inventory works, unfortunately, is if you have a contractual obligation, it's a regulated business and it's a relationship based business. And if you have a contractual obligation to deliver a quantity to a customer and you have committed that, you ought to honor that commitment first of all. So the pricing of the raw material doesn't really matter. You have to procure the raw materials, and we know that about 6 8 9 10 months, maybe a year back, in the aftermath of this Ukraine crisis, the raw material prices across the board started shooting up. But these guys had no option or choice to delay the procurement because supply chain is a very tricky thing in today's climate, unfortunately. So they had to buy those supplies, and the order execution timeline is not in their hands. It's kind of a pull business on the innovator side, at least. So they will be shipping when the innovator is asking for those supplies, and they have to adjust the pricing of the raw material because if the prices then subsequently collapse, which is the case, they have to take that hit. Unfortunately, many companies, I mean, even on the chemical side, I know DMCC took a major hit on the raw material side, and this was fine. I mean, it might work on the flip side as well. So inventory losses and inventory gains, I don't give them much credit either way, because you will also
Yeah.
find inventory gains as well. So these guys may have procured a lot of raw material at the lower price point, and then the prices may rise again, and then there would be inventory gains as well. None of that matters, to be honest with you. What matters
Okay.
is, are they gaining market share? Are they winning more relationship contracts? That's what matters. How Loris is executing the next 5 years. I know a lot of people talk about their ARV side of things, but the real driver will come if I take a 5 year horizon. I'm sure you might have heard that BQ Prime interview recently. The real drivers are the CDMO space. The real drivers are in the biocatalysis, precision fermentation, synthetic biology, 3, 4, 5 years out. The other driver is their complex specialty portfolio of APIs, right? Those things are also important, which not many people discuss. A company with 1,200 scientists, I mean, Divi's has got 400. Compare the two market caps. So I 3, 4 years back, that tweet is still somewhere on my handle. I shared market cap to scientists as a ratio for innovation. It's a good ratio to track. Why not? I mean, why only the over obsession with PE and EV EBITDA?
Yes, correct. Uh, and also adding to that, also like I was saying that the operating profit margins had also like reduced. So it was mainly due to this factor itself, or there were other
No, no, no.
factors
So
also playing a role.
operating fair margin is a function of many things. Gross margin. So let's start with gross margin. What's the kind of the product? And NC margin will be more, right? Generic margins are lower at the gross level. So that will also filter down at the operating level. So high gross margin will naturally lead to high operating margin only when your capacities are optimally utilized. If your capacities are not optimally utilized, then what happens is, let's say you have got 5 plants and 3 of them are optimally utilized, 2 are not. So if you take a unit by unit economics, those 2 plants will be negative EBITDA, but they are not reporting to the street plant wise EBITDA, because the plant wise EBITDA may be 50%, 45%, 40%, and then -10, -20%. They are reporting a consolidated version because of the heavy capex that these guys have done upfront, and that's how the industry works. You got to bite the bullet upfront, which is completely opposite of the banking sector. Banking sector will enjoy the party upfront, and the graveyard scenario will be back-ended. In the CDMO and the API space or pharmaceuticals space in general is the completely opposite picture. You will take the pain first upfront. Pain in terms of heavy capex, pain in terms of hiring expensive scientists, building those capabilities, and the gains will come back-ended in terms of sudden improvement in margins. So if you go back in the history of Laurus Labs, you check what their margins were in 2018 and 19, and what the margins were in 2020 when all these capacities were that they were building back then got optimally utilized. And this very similar scenario will happen next fiscal, or maybe fourth quarter of current fiscal, January, February, March of next year, 2024, January 2024 onwards, when the new CDMO contracts go commercial. And then, because there are many capacities that they have built, it's just like this Syngene Mangalore plant, na? That's sitting
Yes.
idle, but there are people working there. Syngene is giving them salary. Their
Yeah, right.
expenses, they are booking in the P&L. All those expenses are optically reducing your reported operating margins. That's it, simple.
Okay, thanks, Sajal sir. So I got this understanding, and just adding on to that point, you said that few metrics, as in like scientist as a percentage of sales, like how much cost it's there. So in the coming, like in the coming financial reports, what are the few key things which we can track to see that the business is evolving and the things are like turning around for Loris or in
So
general pharma?
no, no, yeah, go on. Continue with the question, please.
No, no, that was my question.
No, sure. So see, there are many things. Many people look at a business from a very many angles. So some analysts will purely value the ARV side of the story because they are playing for next quarter or current quarter, right? Um, some people will take a longer view, longer term view, and I am definitely in that camp. So I look at the number of scientists, because every scientist you are hiring is a unit of growth if you are in the CDMO model, because then you can start billing that scientist, and you are net cash positive on day one, because you're hiring a new scientist, but you're not building a new lab for that scientist. The lab is already there, so that's a sunk cost. Think about the economics of this business, right? So every new scientist, so if you have got 1200 scientists, last year you were 800 approximately. So you have hired 400 additional scientists. So you are paying them salary. You haven't hired them for free, right? So because you are paying
Yes,
them
right.
salary, you're taking a hit on your P&L somewhat.
Correct.
And then those scientists will start becoming productive over a period of time, and they will start generating revenue. They will help move the pipeline from phase 3 or phase 2 forward, right? Hopefully. Most molecules will fail, but they that's fine. Molecule has failed, the scientist has become available now. The scientist can pick up the next project. So that's one area to look at. How many scientists you have, especially for the CDMO business. The other thing to look at, how much capex you are doing, because these guys are they do very calibrated capex based on the order visibility. And in this business, you have to build those plants upfront. If you talk to the Chinese players, they are exactly in the same scenario, same boat. You have to show and convince the innovator that you have the capacity ready to start the shipment. Then they will award you the project. No one,
Okay.
no one will give you the project on the verbal assurance that you will set up the plant. No, no, no. You set up the plant first. Sometimes they also contribute and pay you advances in setting up those facilities. Then once the plant is ready, approved locally by the local regulators as well as US FDA, Japanese regulators, so on and so forth. There will be audit from that innovator team. The whole compliance team will visit. They will audit each and every aspect of that new facility just to make sure that their supply chain is completely de-risked, and then they will say, yeah, you get the award, and you have to execute one or two projects to win the hearts and the minds of the innovator, and then there will be a train full of assignments for you to work on. That's the only way you could scale up this business.
Okay, understood. Thanks a lot. This was very much insightful.
No, no, it was good
Thank
learning for
you.
me as well.
Thank you.
Thank you. Good to interact.
So,
Aditya
Sajal
is
sir,
here. Yeah. Hi, Aditya.
Hi, Sajal sir.
Sir मत बोलो, sir आप please.
Yeah.
So, welcome.
सर आई सॉरी थोड़ा कुछ कुछ ऑडियंस को आवाज नहीं आ रही है तो आई रिक्वेस्ट देम टू ड्रॉप एंड ज्वाइन अगेन और मे बी ट्राई विद
The
देयर
desktop.
लैपटॉप्स
Yeah,
और
yeah.
मे बी सिस्टम या डेस्कटॉप
Desktop is best.
राइट बिकॉज
iPhone or desktop.
हाँ because rest of us I have like checked with many they are okay with the voice so there is no point in starting again. Yeah, Aditya sir.
No, no, nothing here. So let's continue with the questions because I was not able to hear the question and Sajal responded. So I joined after Sajal has started responding. So let's move on with the session. And if you need me, I'm here.
Right. So like as the title for today's discussion goes, Aditya sir, like time for cycle to reverse in pharma. So a broad view so as to start the discussion and then we take on the questions.
Yeah. So I think a time for the cycle to reverse is a very tricky title in itself. So see, first of all, I generally talk about healthcare as a complete basket. So I think hospitals have seen no cycle. They will not see cycles. They are branded, and they are secular plays. So hospitals will continue to do well. Branded generics again don't see cycles generally. This time there is a slight bit of an element of a cycle in terms of the raw material cost, which had gone up dramatically over the last 2 years, and which has now started cooling off. So if you look at the commentary of API companies, look at the commentary of chemical companies, they'll tell you that the input costs for branded generic pharma companies have started to come off. Logistic costs are down, as well as power costs are down. So all of that will also help, no doubt. So yes, that cycle will probably turn now. You will start seeing better margins being reported starting 1Q, 4Q, maybe not, because 4Q generally is a weak season, seasonality wise, is a weak season for the domestic business. Compared to the other quarters, fourth quarter, the sales are relatively lesser in our Indian market in the fourth quarter. So it may be visible in 4Q if you pay real good attention, but for people who don't get into too much details, it may not be visible. 1Q, it will be visible to anyone and everyone because the margins will just pop out, from where they are. Um, on the diagnostic side, yes, the cycle is turning now because the base for diagnostic companies now do not include COVID-related revenues. So you will see diagnostic companies now reporting double-digit top-line growth. Each diagnostic company will have a different double-digit top-line growth. So Dr. Lal can have a 10-12%, and Metropolis can have a 11-12%. Krishna can have a 30%, and Thyro can have a 20%, Vijaya can have 15%, whatever. So you will see because that base, which used to include COVID, will no longer include COVID. So you will have that sort of a growth now visible on the top line for all diagnostic companies. Um, Left are API and unbranded. So unbranded companies margins should also look slightly better, but that is subject to how much price erosion they see. So for them also raw material costs are starting to cool off, just like they are starting to cool off for branded generics. But the problem with them is that while branded generics take price increases every year, unbranded generics take price cut every year. So the margin is therefore a net impact of the cool off of raw material and the price erosion that they see. It will be a net number. So that net number will have to wait and watch as to what it comes. For some company it can be positive, for some company it can be negative, depending on what product basket they have and how much price erosion that product basket sees, and what raw material basket they have and how much price cool off in their raw material basket they see. So unbranded generics is going to be extremely product specific and stock specific, as it always is. Um, Lastly, and not but not least for sure, the API and the CDMO and the CRDMO bucket. Um, there, I feel the cycle is turning in the sense that the stocking that the customers did during COVID, um, that stock is now running out. So now the customers have to start rebuying. So what we saw during COVID was, and I think many of us are to be blamed. We didn't read the data correctly, or maybe we misread the data. So during COVID, a lot of these API companies sold much more than they generally sell, both in terms of volume and higher prices. We mistook it to be the impact of China plus one. I think, to be honest with you, I think uh, China plus one was always going to be a 3 to 5 to 10 year story and not like a 1, 2, 3 quarter story. Uh, so I think a lot of us mistook it. At least I, in certain cases, had started to believe in my own rhetoric that this is China plus one, and that is why API companies are reporting some great numbers. But now I realize that was my mistake, um, and which is why we keep telling everyone on the call and in spaces like this that look, we are also human. We just read, and we have our own biases. So don't blindly follow us. Do your own diligence. So I think I would admit that I didn't read the API numbers that came out in FY21 correctly. So in FY21, a lot of these API companies sold at higher than normal prices and higher than normal volumes, which was essentially just stocking by their customers because the customers didn't want to be stock out in a situation of a COVID lockdown and disruption in supplies. So they wanted to have enough stock of raw material. Now, what happened in 22 and for a good part of 23, that stocking that happened in full year of FY21 and partially in FY22, that stock was getting liquidated by these customers, and therefore the orders that were placed were not enough. The volume growth was not there in FI for a good part of FY22 and complete part of FY23 for these API companies over the base of FY22 and 21. And the pricing also had become reasonable because the world has started to adjust to COVID. So I think FY24 for API companies will show normal growth because you have a normalized base, you have a normalized operating environment, and also again the raw material cost for API companies also fall off because the raw material cost of chemicals and etc. are coming down. So that also translates to lower raw material cost for API companies. Now within API companies, obviously again you have generic API companies which are predominantly generic and API companies which are predominantly innovator. So I am again still more tilted towards the innovator CDMO API companies because I feel the pricing power there is again better. With the generic API companies, again, it depends on whether their customers are facing too much price erosion in the end market, then they will not be able to take price increases or adjust to the newer cost of materials, and therefore they will have challenges. So yeah, but volume growth I think will come across regardless of innovator and this, but the margin will again depend on your end customer's profitability and his willingness to give you a higher price or a better price. So that's broadly my outlook of the 5 buckets of healthcare slash pharma as I look at it, Prince.
Thanks, Aditya sir. So one question is on like heard a lot about thesis pointers for branded pharma. Any anti-thesis pointers And is government regulation pushing drugs to NLEM the only risk, or are there any other risk also? The question is to both, sir.
I will take it first, and then maybe Sajal can obviously come in with his view. Um See, in branded generic pharma, there are two risks. So, first risk is regulatory risk. Now, the regulatory risk, to my mind, is very, very remote. The chance of that risk playing out is very low. And regulatory risk, when I say, I don't imply price regulation. See, price regulation, first to sort of answer to that particular point, from 1975 to 2014, the price regulation in India was based on cost. So each pharma company had to submit their cost sheets for each product to the Ministry of Health, Ministry of Chemicals and Fertilizers, under which comes Department of Pharmaceuticals. And they used to study the cost sheet, and then they used to give a 50% markup on the cost. And that used to be the ceiling price for a given molecule. Now, that was a very, very draconian situation, which the pharma companies had actually lived with for 40 years, from 2075 to 2040, from 1975 to 2014. Come 2014, the mechanism was changed. The mechanism came to that if a drug now comes under price control, the ministry takes the data of all the brands which have more than 1% volume share, and the prices of all those brands is just done a simple average on the prices of all those brands, and that becomes a ceiling price. So the difference between the original mechanism and the new mechanism, new as in 2014 mechanism, is that originally it was based on the cost of the product. Now it became based on the market prices of the brands in the market. So when the moment that switch happened, the entire brouhaha on significant loss of profitability because of NLEM is gone, because none of the pharma companies that we talk about are premium pricing players. The premium pricing players in our Indian pharma market are the MNC pharma companies. So they are the ones who have the majority issue with the even with the current regulation. The Indian pharma companies within the current regulation are very, very comfortable. No matter how many drugs go under NLEM under the current framework, most of the Indian pharma companies will have absolutely zero challenge working with that number. The MNC pharma companies will have a challenge. So just to give you a number, right? So I am on a blood thinner called rivaroxaban. I have a weak heart, so I take blood thinner so that my heart functions properly. Now, rivaroxaban, the branded product is Xarelto. Now, Xarelto is available in the Indian market, and many generic versions are also available. So, Xarelto, I think, is available for about 1400 rupees for a strip of 28 tablets. So, that's 50 rupees a tablet, broadly speaking. And the one I take is from Lupin, Rivaban. That's like, I think it's about 7 rupees a tablet or something, right? So if a price regulation were to come tomorrow in Xarelto or in Rivaroxaban, the average pricing will be done for Xarelto as a brand at 1400 and Lupin as a brand at, let's say, 140. And then the average will, let's say, come at whatever, 800 rupees. Now, Lupin is at 140. They don't care if the ceiling is 800, they're not impacted. But the 1400 rupee product will need to come down to 800. And that is where the MNCs basically take a big hit. So Indian pharma companies, trust me, very, very rare situations will find that they have any significant impact from NLEM. That's not the threat that they have. The threat that we have from regulation is the unbranded generic part, where the government has sort of mandated most government hospitals to write only generic drugs. Now that has taken away some volume from these branded generic companies, but that's a very minuscule amount of volume, because you know how many people go to government hospitals. They anyways can't afford branded generic drugs, so it's better that they at least get some kind of drugs under the unbranded generic schemes, which is okay. So that's one regulation. If that regulation is expanded in scope, there is a challenge there. That again is a very remote possibility situation given the way our market is structured. But you never know. So that is, if you have to find an antithesis, that is one antithesis. Second antithesis, capital allocation. See, branded generic pharma company, branded generic business generates a bunch of cash. And there is no reinvestment needs because you are not manufacturing your drugs third party. Anyways, whatever investment you do is OPEX, not CAPEX. So in operating expenses, anyways, you write it off on the P&L. So there's a bunch of cash left with the entrepreneur. Now, how does the entrepreneur utilize the cash? That is the biggest risk in my view. That is the biggest antithesis, because if the entrepreneur uses the cash to do some unbranded generic US business or some shady acquisition, I can name so many absolutely worthless acquisitions done in the branded generic space over the last 5 years, and at ridiculous valuations, and there was destroyed value by doing those acquisitions. So I think that is a key risk, but that is an unsystematic risk. That is a risk that is specific to companies and managements. So you need to sort of filter those companies and managements for their track record and for their understanding of how these risks can play out. And which is where, our skill set sort of as fund managers come in, where we understand the company, their track record, and their thought process to an extent. And therefore, we avoid companies where we feel that such mistakes are more possible. And we basically buy those companies where such mistakes are less possible. Does that answer your question, Prince?
It does, sir. Sajal sir, any inputs from you?
No, so I think all great points added by Aditya, and I absolutely agree with all of them. Just few things to add. So first of all, I I generally categorize risk in three buckets. So the current risk, there is remote risk, and then there is real risk or the unseen risk, which is the big sort of black swan. So in terms of the current risk these are well documented. So regulatory, as Aditya pointed out, or GGS, unbranded generics, right? The Jan Aushadhi side of things. Then price caps via DPCO and LEM. That's another well documented risk we have. MR productivity not improving, that's also a risk. So take Indoco as an example. It's a chronic patient. 4 years back, their MR productivity was X. Even today, that MR productivity is X. No improvement. So well documented risk, productivity not improving. So that's another one. And then attrition, people moving around, um, especially MRs, poaching and all the rest of it. That's also a very well documented risk. Capital allocation, as Aditya pointed out. So overpaying for acquisitions, you buying something at 8-9 times price to sales without having any assured degree of cash flow predictability. So you are overpaying because you acquired that business in a bidding war. So it could be a game of ego, as an example. So that's misallocation of capital. So if you are a diversified, a globally diversified business like these generic conglomerates like Lupin, Sun, etc., they've got many businesses. So you need to see, how much capital allocation they are doing in a low ROC business versus a high ROC. So all of these guys, they have got, a fantastic India business, exceptionally great ROIC. But then the ROIC or ROC that they report is a console number of including the US, Africa, other emerging and regulated markets. So capital allocation misallocation is a significant, but all these are well documented risks. And maybe a remote risk, if I could think of, is any US type buyer side consolidation in medium to long term happening in India. So e-pharmacy is becoming very dominant because of some consolidation or something, which definitely not a current or a near-term risk, but this is at least a known remote risk. But the real risks are, that we don't know. So COVID was one such, when people stopped stepping outside their homes due to lockdown, right? Um, and there will be more such unseen, unknown risks that will hit even the branded space. And unfortunately, we would have to react in real time as and when those risks materialize. Nothing is risk free. So yeah, there will be many risks that we don't know, but those are the real big risk in my view, because we don't know them, we are not prepared, and the valuations are not factoring those risks.
Right, sir. We also got Rahul with us. So, Rahul, any comments on the same question or any questions to us? I mean, over to you.
No, no, I think Sajal Bhai and Aditya Bhai has covered everything. Just one point to add on this perspective. Recently, there's a news article.
Rahul, I cannot hear you. Like your voice is very low. Is it same with Sajal sir and Aditya sir, or are you guys able to hear
No,
him
we
properly?
can't hear him as well.
Hi, can you guys?
So Rahul, can you be a bit louder or maybe check the network area on your part?
Can you guys hear me now?
Still very, very low volume, Rahul. I think is your mic closer to your
Yeah.
mouth? Yeah, it just got better now. Just got
Okay.
better.
Okay. So just to add what Aditya Bhai and Sajal Bhai mentioned, one point to add from my end, some of the tail events, right? Uh, for example, recently a news article just a couple of weeks back was that DGCI is going to consider a complete ban on the all the fixed drug combination, all the FDCs. Of course, it's nearly impossible. A lot of lobbying will happen, but there are some regulatory risks from what beyond Aditya Bhai and Sajal Bhai mentioned. There are some lurking risks, basically tail events. There are possibilities there. Of course, low probability events, but it's just a possibility. I'm saying.
That's
Right.
fair, yeah, Rahul. Correct.
Yeah, no, absolutely,
Right.
absolutely, Rahul bhai. I fully appreciate. I mean, is the tail risk or the unknown unknowns that hit us the hardest?
Yeah, and also if I may highlight, I'm sure Aditya Bhai would be aware about it. So government is working under the new on the healthcare side specifically for diagnostics now, where they are trying to standardize some kind of all the, for example, if there is a blood test or any kind of diagnosis, right, for the laboratories, they're trying to standardize that in terms of the output, in terms of what will be the range. Like there are too many variations across all the laboratories, so there is some work in progress in the national diagnostics chains, how they will work out. It's in work in progress, but I'm not sure how that will play out in the medium term.
Yeah, I think that's actually been ongoing, Rahul, for a while. ये जो NABL accreditation होता है, National Accredited Board of Laboratories, so the irony is that in India only 2% of diagnostic labs are
Right,
NABL accredited, right? That's what Rahul Guha, the Thyrocare CEO, said on the call. So if it's only 2% that is accredited, so those 2% are in sync because then the SOPs are set, and that is what the NABL does. It basically establishes a bunch of SOPs for these labs
right,
to operate. Now, now the problem with diagnostic industry is in India is that 85% of the market is unorganized. And that 85% market is obviously not NABL accredited. The irony is that the 15% which is organized, of which 13% is not accredited, only 2% is accredited. So that is the
right,
irony. So my limited submission here is that even if government wants to standardize, it can only reach the
right.
15%.
Absolutely.
Beyond the other 85% they can't touch because वो mom and pop stores है यार उसको कहाँ how do you reach them?
True, true,
You can't
true,
reach.
true. Absolutely.
So and as long as the pricing is still what it is today, and you're allowed to be flexible on pricing because let's admit uh, hospitals and diagnostics are like retail chains, right? So you cannot have a standard price for a hospital in Nalasopada and the same hospital in Breach Candy, right? Real estate cost it's not dramatically different that even if everything else is the same, which it is not, but even if everything else is the same, you still need to have different prices for the same hospital in Nalasopada and Breach Candy,
Agreed.
right? So so government has tried standardizing pricing. They've tried their hands at through the NLEDT and through multiple Ayushman Bharat type schemes. All of it is failing like head over heels. मतलब वो it doesn't work. It just simply doesn't
Absolutely,
work.
absolutely. I'm with you on this.
Yeah. So SOPs established करने it is good for the patient, good for the organized chain, bad for the unorganized chain. The shift between unorganized to organized will actually be faster if that
Right, right.
happens.
Fair point.
Right. So next set of questions, two questions I read it out in sync. Is the capability and integrity of Indian innovators CDMO companies equivalent to that of global companies of the likes of Lonza? If no, how big the gap is? And as CDMO requires frequent, huge capital outlay, and the current set of players are comparatively much smaller as compared to their global peers. So, how will they get impacted by the recent entry of domestic players with deep pockets?
Aditya?
Sajal sir?
Sajal bhai, your CDMO is completely yours.
नहीं नहीं ऐसा नहीं. See, it's a good question, and and I would definitely invite Rahul and Aditya's view because I also want to learn. But I'll tell you what my current understanding is because the way the question has been framed. we have to look. So they mentioned Lonza, right? So Lonza is over 100-year-old organization as we speak, and they when they started their journey, they were a utilities company. Not many would know that Lonza was not even into chemicals, let alone the CDMO. So they started manufacturing power. So they were a utility power generating company to begin with. Then from there, over the decades, following decades, they started transitioning into commodity chemicals, so nitric acid and those kind of commodity chemicals. Then they started moving slowly into the specialty chemicals space, and then they started the CDMO services in the last 3-4 decades. Today they are into the very advanced cutting edge manufacturing of biologics, and everything. And Lonza is up very much up there with the Thermo Fisher's CDMO, the Wuxis of the world, right, in terms of scale and capability. So expecting these Indian players to match the might of Lonza, I think, is a pretty premature and not a like for like comparison, because you are comparing the cash flows of an over 100-year organization that has been through various stages of transformation and metamorphosis over the decades. Um, Comparing Lonza's biologics capability, as far as I know, there is only one company that has actually secured the contracts to manufacture biologics commercially for innovator, and that is Syngene, for that $500 million deal that they secured from Zoetis for that biologics drug. I have not seen any company announce any biologics commercial contract in India other than Syngene. So that is for sure. So on the biologic side, and even on the small molecule side, I have not seen any company publicly announcing that, look, I have secured a 5-year, 10-year contract on a novel molecule. So that kind of separates Syngene from the rest, because it's not a narrative; it's backed by the data. Um, then if I if I talk about, I think there was another question as well in terms of the frequent huge capital outlay or something along those lines, right? So um, I would say the amount of incremental growth capex that a CDMO with 4 billion USD run rate requires would be obviously much more than a CDMO with a 4 billion INR. So regarding the recent entry of the CDMO players, the new groups, the Murugappas and Nirma Group, etc. I mean, I asked this question to Dr. Satya on my BQ Prime interview. It's on YouTube. You might have or you might not have heard that. And his response was pretty comprehensive and satisfactory. He said that large players entering the CDMO space is good for the branding of the country and the space in general. There were many non-IT companies, infrastructure companies, tobacco companies that entered into the IT services space decades back. And that was good for the industry as a whole, because when you deliver, the innovator sitting thousands of miles away, they get more confidence on the capability, the scientific and the execution capability of the scientist of India. So that is definitely positive. But the only difference between IT services, so L&T started IT services in mid 90s, and then ITC started somewhere around 2000. Many other companies that were originally, Wipro was never into, so just like Lonza was never into CDMO, Wipro was never into IT services. But the biggest difference is there was no regulatory hurdle for any of these companies like ITC or L&T switching gears. Whereas in CDMO, and especially on the NCE side, there is a massive, few more massives of entry barrier, regulatory, environment compliance, social compliance, so on and so forth. So it would be very difficult to actually execute. So first of all, you need to win the trust of the innovator that they award you the NCE project. Generic is easy. Most of these companies will probably do generics begin with, because they need to learn to walk first before they can even think of running. So they will probably start with, the CMO, generic CMO. They may not accept it publicly. They will say we are doing CDMO because सुनने में थोड़ा अच्छा लगता है ना, glamorous है CDMO. But reality might be that they would still be doing generics, and over a period of time, they will try to secure NCE. But you need serious capability to take a molecule from phase one all the way to commercial. Very few companies would be able to do that globally. Even US CDMO players, they struggle to scale up a molecule from phase two to phase three. Um, and I know what I'm talking about, right? So announcing huge capex is easy. Working with difficult chemistry in phase one and phase two is not easy. So it will be an interesting space, but it will be an interesting space for very few players when it comes to novel chemistry and novel biologics capability. Generics will be bhedchal. Many will do generics. That's my current understanding. I would like to hear what Rahul and Aditya have to say.
No, yeah, nothing more to add to what Sajal Bhai said. I think is perfectly defined it. You cannot compare Lonza to any of the companies that are listed in India, at least. We are much younger. And the fact that you have behemoths like Catalent, Lonza, Thermo Fisher, etc., uh, you need alternatives to those behemoths, because there cannot be over reliance even on one sort of player, because that beats the whole idea of diversification, supply chain diversification, or de-risking, as you call it. So yeah, you need more players, and cost also plays a role. All the behemoths are again mostly European, American, quasi-American, quasi-European. So you need a lower cost base as well, and which is where basically India fits in nicely. Yes, capability wise we are short, but we are short in experience as well. And but we have the ecosystem that can nurture the capability and the scale over a period of time, and that is what we basically are betting on, because that was the situation for IT a few decades back, and that is the situation for CDMO today. So I see those as perfect parallels, actually. Rahul, if you want to add something here.
Yeah. So broadly, Sajal Bhai and Aditya Bhai have encapsulated the thesis very well. Just I'd like to add my thesis around some data points that some of my channel six have shared. People who have been like the suppliers, whether it's gas turbines or those kind of hardware suppliers to Lonza, they have also been suppliers to players like Syngene in India. So they were kind of surprised with in terms of the kiloliter or any kind of capacity benchmarks that we keep. They were of the view that almost every plant of Lonza at one location were dedicated to each of the players. What Syngene has done with BMS, right? So these guys, Lonza, almost out of 100 plants, like 60 to 70 are dedicated individually to each client. That is the kind of size and scale they are working at. So India will take around 10 years to move in that direction.
Yeah, absolutely. And just one more point that I missed. You take any CDMO player in India, from Divi's all the way to Syngene and everyone else in between, none of them, I repeat, none of them have the confidence to share their pipeline of preclinical phase one, phase two, phase three, and commercial. Not a single one except Newland. So any analyst, I mean, I know many analysts are listening to this, and they are probably um, few disguised managements as well, and there may be other people. I'm just talking to you. I mean, what's stopping you from sharing your pipeline just like Newland is doing? Uh, that perhaps that will motivate you even more. When Wuxi can share the pipeline as big as Wuxi and as small, it's a micro player, Newland Labs, and they have been sharing not from today, over the last 4 or 5 years. You can check all those records in their presentations. They always come up with how many molecules they have in preclinical, phase one, phase two, phase three. That kind of gives us the confidence. See, the way it works is, if you have got a molecule in phase three, there is about 55-60% probability that it will move into commercial. And if you have got a molecule in development, that means there is a probability that molecule is already commercial. And the innovator is looking for a second source, and they want you to show your capability and competence in validating that molecule. So sharing that pipeline gives us the visibility, because that's the only thing that we have other than the number of scientists. So players like Divi's, Laura's, Syngene, others, I mean, they should have that courage to share their detailed pipeline of molecules. We're not interested in knowing the name of those innovators. We're not interested in knowing the name of those molecules. Just give us at least some visibility of the numbers. So Wuxi does that. That's all.
So I think Suven used to share like pre-demerger.
Yeah, so when used to 5 years
Yeah,
back, they
pre-demerger.
stopped it because now they know that their pipeline is maturing. It's about to go off patent, and even now, I mean, Suven is no longer the same Suven after this announcement, right? So, majority of Suven's revenue after the merger will be generics. Majority of it will be generics.
Right.
So next question is like, what's your views regarding IOL Chemicals management change and their strategy and direction going forward from here?
Now, I've got some very interesting data. So, management change is a heads or tails event, and nothing in between. So it's a 0 or 1 for me. And I'll give you some examples. So HCG management change, we know it has been fruitful, positive. JB Pharma management change has been super. RPG management change, when Yugal Sikri joined, you look at the return ratios, you look at the balance sheet, you look at the cash flows after Mr. Yugal Sikri joined. They are the good examples. Now I'll give you two more examples which are not so great. Sequent and Piramal. Um, Most of you may not have noticed there is a management change, significant management change in Piramal. The person who used to answer pharmaceutical queries on earnings call is not the person who is answering today. The team who was heading their CDMO operations before the demerger is not the team that is heading their CDMO operations. And the older team was the team that actually created that business. And they are nowhere now. So management change is a very digital event. It's 0 or 1. So the Sequent guy has now joined Jackson Pal, and full disclaimer that I have a vested interest in that business because I follow the management. I just want to follow the management because I know that there is an inherent capability and a differentiated DNA to reward the shareholders. So Manish Gupta is a class act. He is super conservative. I I will probably never see him acquiring an expensive paying an expensive valuations for an acquisition. उनकी अंटी से पैसा ही नहीं निकलता, and he's sitting on more than 100 crores of cash in Jackson Falls, and every year he is adding cash. So 2 years out, 200-250 करोड़ क्या net cash होगा balance sheet पे. Return ratios will are rising, and they will probably go through the roof. I mean, I won't be surprised if I see 70, 80, 90% ROIC couple of years out. Um, so and three times sales, just three times sales, and but it's very illiquid, so funds will not be interested because it's not the kind of size where they can deploy 100 crores. But I know people are tracking it from the sidelines because they know that the management execution is a proven one. Manish Gupta also executed in Agila, the Sequent business, right? So I tend to follow great minds, honest, capable, ethical people. So management change again is a very digital. So Jackson Pal is not the same business and that it used to be. I mean, they used to have a very terrible. I mean, you look at the just. I'll take a couple of minutes to just share, just to give the comparison of the management change. If you look at the history of Jackson Pal, they had very high working capital from 195 days, negligible cash generation, very poor return ratios when the old management was in charge. And today, the working capital is in line with industry standards, right? It's about so from 195 days, it's now down to 45 odd days. Heavy cash generation, from having no cash generation capability to heavy cash generation. Substantial improvement in ROE, ROCE. And this is just in the last 1 year. Um, Outperforming. So Jackson Pal, even under the old management, they've been outperforming the IPM, the Indian pharmaceutical market, and that outperformance has been visible in numbers over the last 5 years or so. And then they've got some very one or two. So it's a gynec centric and ortho centric sort of business, very small business, but ROIC, as I said, I expect, I won't be surprised even if the ROIC, 3, 4, 5 years out is above 100%, because it's a very asset light business. It's a pure branding. So this is a good comparison with an FMCG business because there is no US FDA. So that takes the asset light model, very asset light, because majority of the manufacturing, so they just check the compliance of the incoming APIs and the formulations, right? And then they just they it's a branded field force. Um, the MRs are their biggest asset, and the brand, of course. But the biggest kicker for me was the management change, because I know the capability of that management. So it was a very easy decision for me. Whereas now I know how it works. So again, so to answer your question, uh, we don't know how the IOL management change would play out um, as on today. But looking at the resume of the guy who has come in, I mean, it kind of gives us the hope that the execution should follow. Otherwise, why would you risk your impressive CV? Because IOL, as on today, is a very small business, but they have started diversifying into molecules other than ibuprofen. Um, I guess Team Incred visited them recently. Aditya, would you be able to share any pointers or any insights?
So actually, my analyst visited, and we haven't really spoken about it in detail anywhere else. So I would avoid speaking about it. But what I can say is that uh, given the right execution, the recipe is for a success is there. But the key to watch out for in this company will be execution. I think the elements of success are present, but evidence of success is not there yet. So that is where, I would leave it.
One evidence of success that I saw, Aditya, was so in one of the earlier spaces, you said that compare their EBITDA to CFO conversion. And
Right.
I did that. The long-term EBITDA to CFO conversion for IOL is better than DVs.
Yeah.
So IOL is
Hmm.
65%, DVs is 62%.
Hmm. Hmm.
So and if you check the 25-year share price returns, IOL
Correct.
has returned more than DV. So I posted that graph a month or 2 months back.
Yeah, yeah. No, I agree on those points, and which is why, we took some interest. But as I said, it's just work under progress still. So You know,
No, absolutely,
we don't want to
absolutely.
talk about it without having a
Uh-huh.
concrete thing.
Definitely. Because again, see, guys, this is cyclical business. It's a generic business, na? So there will be cycles. Um, so 6% EBITDA margin or 6% operating margin is probably the lower end of the cycle. And that's why I tweeted that it's unlikely. I mean, it could have stayed at 6%. It improved from 6 to 8%. So I'm not going to pat my back for that because that's not what my thesis was. I'm expecting over a 2, 3 year, they should be trending towards mid-teens. But I wouldn't expect a generic business to stay at 40% EBITDA margin. Divi's was a bad example in that sense because majority of Divi's molecules are also generic. And I don't think Divi's is going back to 40% operating margins anytime soon. 30 to 35% I think is the new normal even for Divi's.
So, Rahul, any inputs you want to give, or shall we move on to next question?
Hi, I would like to avoid any comments on any individual company names, please. Thank you.
Right, right. So next question is like, Sequent is the only US FDA company in Asia for animal health. Carlyle has bought majority shares as an investment and won't be keeping long with them, as their motto is to earn on their investment and exit. So will Sequent be the best candidate for the takeover?
I mean, I don't know. So one thing that I'm not 100%, I wouldn't agree with the question itself. Sequent is not the only company today with US FDA approval in animal. So Syngene has US FDA approval for biologics, let alone small molecules that they are doing for Zoetis, right? Um, we have Heikel with US FDA approved facilities. We have Laurus joining the animal party soon. So the competitive landscape, it keeps changing. So I think private equity has failed to add value. So they paid $86. I know they probably would have come in for at least 5 years, but they may not get a decent exit given the current performance that they have shown. So they would have to play out of their skin, if I'm completely honest. They would have to score a century in next 30-35 balls. That's the asking rate for the current sequence management and promoter because they are just renting it out, right? So they're not here to settle permanently. They would have to find a buyer. For that, they would have to add value, and the asking rate is exactly that. They need 100 runs in 33-35 balls. Can they do it? Well, wait and watch. Aditya, any thoughts? I mean, I know you were tracking Sequent at one point,
No,
but
so
it
I
hasn't
think,
it hasn't it hasn't played out like we expected, right?
yeah, it hasn't clearly. I was on Sequent calls multiple times, and I did ask them the one question I like to ask, that if you say you are branded, then when there is cost pressure, where is the price increase? And there was not a good enough answer to that yet. So we'll leave it to that, leave it
Hmm,
at that.
hmm, Absolutely. No, no, yeah, I heard your questions on that call. I think it was three, four, five, three, no, three or four quarters back. I think when the new management just joined, it was the first or the second call.
Yeah, yeah, I think so. And see, when I say branded healthcare, what I basically mean companies or businesses with pricing power, right?
Yeah,
Because any
absolutely.
brand should have pricing power. And if you
Yeah,
don't, then you're not really a brand. I mean, then so yeah, I mean that's where we left it. Yeah.
yeah. And just to add, few more pointers for people who have not tracked Sequent or they haven't read the annual reports or the transcripts. It's a very diversified, overly diversified business. So let's take Europe as a as a as a as a continent. Europe is a collection of unrelated countries. So what works in Spain doesn't work in the neighborhood or the neighboring countries. Every country is different from language, culture perspective, right? And the only way you can generate revenues from a branded generic business is there are two ways. Either you have your distributors who will take a margin cut to distribute your products, last mile connectivity, or you build your own field force. If you build your own field force, that's a fixed cost for you. So even if they are not selling anything, you got to pay them salary. So you can have one or the two models, and it's different for country by country. So perhaps a local country specific distribution is a better model for Europe. They acquired a sterile plant in Germany about 4 years ago. No execution has happened because the objective was to file injectables and enter the US market on the back of that facility. I mean, some traction should have been, even if I include COVID disruption. Um, it's a 3-year-old story, COVID now. So no execution even on the Bremer facility that they acquired. Brazil is still their jewel in the crown. So Brazil is a good business for them, but Brazil alone cannot move the needle for Sequent. Turkey is in Turkey for Turkey predominantly. So translation, they take the translation hit because lira it keeps diluting, right? But the objective for Turkey was also to be used as an exports base. And I have not seen much traction on that front, and probably it's too early to expect a significant needle moving traction from Turkey. They have also in recent quarters disappointed on the domestic India business. So net, I mean, they haven't been able to perform on the generic side. It would be it would be very naive to expect that suddenly they will start performing on the CDMO side when you have got bigger and better players like Syngene, Heikel, now Laurus joining the animal healthcare on the CDMO side as well. So I wouldn't be too positive just because the price has crashed. See, there is another thing that investors do because the price has crashed from 300, 350 to 60 or 70 or 80, whatever. They think that now is the time to jump in. Yeah, it's time to jump in if you have got clear triggers to take the earnings forward because markets only reward the forward rate of change. So even if you buy the stock at a low price, if the forward rate of change triggers are missing, you will either be left holding that stock in a range for next 2, 3, 4 years, and you will miss out on many other opportunities where earnings traction will be dramatically better over a 2, 3, 4 year period. So you will miss out on those multi-bagger opportunities. So just don't look at the fact that price is corrected. Also try and figure out, talk to the management whether there are significant and concrete triggers to move the earnings because I have not seen a single stock that performs without earnings. Earnings is the mother's milk.
Right, sir. So, sir, we got Shubham. He has one question which was selected. So, Shubham, you can unmute and ask your question.
Yeah, hi, am I audible?
Yeah, Shubham, go ahead.
पहले तो पाई लागू साजल सर और आदित्य सर मतलब बिग फैन हियर तो
Very
जस्ट
fine, yaar. We are students. We are also learning. So ask if you ask some good questions, you will be helping us more than anything.
यस सर तो सर मेरा क्वेश्चन ये था मतलब आई थिंक आप ऑलरेडी ये बहुत बार सुन चुके होंगे मतलब एआरवी साइड ऑफ लॉरस एआरवी पर सर एक नया डेवलपमेंट मेरे व्यू में हुआ है लाइक एआरवी में लॉरस में तो व्हाट हैज हैपेंड कि मैं ऑरो फार्मा ट्रैक कर रहा था एंड ऑरो फार्मा में आई थिंक 30th मार्च के आसपास एक दे रिलीज समथिंग लाइक वो लोग लॉन्ग एक्टिंग एआरवी जेनरिक्स पे काम कर मतलब उनको अप्रूवल मिला है तो लॉन्ग एक्टिंग में सर ये फर्क है कि ये बहुत इसको बहुत कम एडमिनिस्टर करना पड़ता है नॉर्मल एआरवी ड्रग्स को बहुत बार खाना पड़ता है इन अ ईयर इट शुड बी एडमिनिस्टर्ड अ लॉट ऑफ टाइम्स तो ये बेटर है लॉन्ग लास्टिंग है तो सर आई थिंक सो इट इज कार्बोटेग्राविर शायद है वो ड्रग का नाम आई थिंक सो लॉरस आल्सो मेंशन्ड अबाउट इट आई रिमेंबर पर सर मतलब मतलब क्लियर है ना सर कि अभी कॉम्पिटिटिव इंटेंसिटी बढ़ने वाली है इस एआरवी में, एंड चाहे, हाँ मैं लॉन्ग टर्म व्यू तो देख रहा हूँ सर, लाइक 5 years डाउन द लाइन हाउ हाई वैल्यू सेगमेंट्स, नीश सेगमेंट्स में ज्यादा उनका बढ़ने वाला है। पर अगले 1 year में भी अगर मैं खुद को पोजीशन करना चाहता हूँ, तो ऑलरेडी एक प्रॉब्लम तो है कि उनका बेस बहुत बड़ा है, कि मतलब वो पैक्सलोविड का बेस बहुत बड़ा कर दिया उसने, तो वो तो पहला प्रॉब्लम है। फिर दूसरा प्रॉब्लम है ये जो एआरवी में जो इनका अभी भी एक मतलब नॉट वेरी सिग्निफिकेंट बट स्टिल अ गुड पोर्शन ऑफ रेवेन्यूज है, जो इनका इनफैक्ट वन पॉइंट ऑफ टाइम बहुत मतलब ज्यादा था, ऑब्वियसली कैश काउ, एक कैश काउ था। तो अब अगर ये कॉम्पिटेटिव इंटेंसिटी बढ़ती है, तो इज इट लाइक एडिंग टू प्रॉब्लम्स, लाइक FY24 में, FY25 में हम रिकवरी सोच रहे थे कि FY24 के बेस पे FY25 में रिकवरी होगी, तो will it like delay the recovery in your view, or is this something that it's not that consequential आपके हिसाब से सर? तो बस वही जानना था।
नहीं
राइट
नहीं, शुभम, आपने आपने बड़ा थॉटफुल क्वेश्चन पूछा है, और बिकॉज आपने हिंदी में पूछा है, सो आई विल आंसर इन हिंदी फर्स्ट, बट आई नो देयर आर लॉट ऑफ पीपल who don't understand Hindi, so I'll translate to the best of my ability in English as well. तो हिंदी में पहले मैं ये बोलूंगा कि आपका क्वेश्चन बिल्कुल रेलेवेंट है, कि वो जो आपने डिसरप्शन की बात करी एआरवी स्पेस में, उसमें दो बातें होती हैं। जो लॉन्ग एक्टिंग आप बात कर रहे हो, वो है तो वो इंजेक्टेबल ही, पहली चीज। आप ग्लोबली कोई भी थेरेपी उठा के देखो, उसमें जो पेशेंट कंप्लायंस होती है वो ओरल थेरेपी में बेटर होती है। इसीलिए आप देखोगे बायोकॉन ओरल इंसुलिन को निकालने में मतलब पूरे पसीने निकाल दिए। ओरल थेरेपी में पेशेंट कंप्लायंस इसलिए होती है कि वो, एक तो कई लोगों को एक फोबिया होता है सुई भुकवाने का, दे डोंट एंजॉय दैट एक्सपीरियंस, वो सुई लगाने वाला। प्लस आपके घर में तो सुई लगेगी नहीं, बहुत कम लोग होते हैं जो इंसुलिन खुद ही ले लेते हैं इंजेक्शन। आपको डिस्पेंसरी या कहीं जाना पड़ेगा, प्राइमरी क्लिनिक, तो अब आपको ऑफिस भी देखना है या कुछ है आपके घर में, तो वो सबके लिए वो इतना सहूलियत वाला काम होता नहीं है कि अब मैं दिन में एक बार मुझे यार वो इंजेक्शन लगवाने जाना है। तो वो पेशेंट कंप्लायंस जो है वो ओरल थेरेपी में बेटर होता है। ठीक है। दूसरा, फार्मा में ना एक चीज होती है अफोर्डेबिलिटी एंड एक्सेसिबिलिटी। तो ये एक्सेसिबिलिटी वाला एंगल तो मैंने आपको समझाया, पेशेंट कंप्लायंस वाला। अफोर्डेबिलिटी भी इंपॉर्टेंट है, कि आपको दिन में 10 गोली खानी पड़ रही है, लेकिन अगर वो सस्ती है इन एन इन्फ्लेशनरी एनवायरनमेंट जहां एक एक पैसे की कीमत है। ठीक है ना, कितनी कितना वर्ल्ड में जो 7 बिलियन की पॉपुलेशन है, उसमें से कितने हैं जो वो एप्पल के स्टोर में भीड़ लगा के सामान खरीद सकते हैं। 80-90% ऑफ ग्लोबल पॉपुलेशन इज स्टिल रिलेटिवली पुअर। उनके लिए वो कीमत है पैसे की। तो किसी को तो सस्ती दवाई भी बनानी पड़ेगी जो अफ्रीका में काम आए और अदर प्लेसेस में भी काम आए। मैं यूएस भी ट्रेवल करता हूं। आई सी आई सी लो इनकम पीपल देयर, आई सी पॉवर्टी देयर, आई सी पॉवर्टी इन यूरोप। तो कहना आसान है कि नॉवल थेरेपी आ गई है, कुछ डिसरप्ट नहीं होता। इट नेवर सी इन फार्मा ना, कभी 0 और 1 नहीं चलता है कि कोई नई थेरेपी आ गई तो पुरानी वाली 0 हो जाएगी। तो कुछ लोग हैं जो इंजेक्शन लगवा लेंगे, अफोर्ड कर लेंगे, इट विल प्रोबेबली वर्क आउट फॉर देम। एंड एक चीज शायद आपने मिस कर दी, पिछले कॉल में भी मैंने भी क्वेश्चन पूछा था, लॉरस इज ऑल्सो इंजेक्टेबल स्पेस में एक्टिव हो गए। और अक्सर हमने देखा है जेनेरिक इंडस्ट्री में ना, फर्स्ट मूवर शुरू में तो खुश होता है, बट लास्ट मूवर जो है ना, उसकी लास्ट लाफ होती है। कई कई मॉलिक्यूल्स ऐसे थे जिसमें डिवीज वाज द नंबर 15 और नंबर 20th प्लेयर, और मार्केट लीडर अल्टीमेटली बन गए क्योंकि उनका प्रोसेस बेटर था, अफोर्डेबल था, चीपर था। तो प्रोसेस इनोवेशन को लोग बहुत ज्यादा अंडर एस्टिमेट कर जाते हैं फार्मा में। सो दैट would be my response in Hindi, and then if I can try and translate it. See, patient compliance works far better in oral therapies, and there is enough data and evidence to prove that. So I would rather, so if I have a phobia against injections, I would rather prefer taking a tablet or a capsule. So patient compliance is better in oral therapies, and affordability and accessibility is always a factor in any therapy, because majority of the global population is still relatively poor. They cannot afford any therapy at any price. Novel therapies usually work where there is a, a philanthropic organization or a government support, because there is an unmet need or it's a rare disease. In those cases, these NCs and NBs they perform better because they are expensive therapies, but you need some sort of philanthropic helping hand, so to speak, right? The future of Loras, as I see, as on today, is predominantly on the other three engines, which people normally don't talk about. So ARV is the only buzzword, and then there, Loras is also into innovator synthesis, where they are doing heavy capex, and they are not just interested in pharmaceutical side of CDMO. There is a large opportunity in precision fermentation, in the alternate proteins, um, and of course the near term growth engine of specialty generics, complex APIs like oncology, etc. But and of course the Laurus Bio, which will start kicking in, in the medium to long term. But I would, keep your attention on, so exactly the example that I used for Sequent, literally 5 minutes back, that so whatever we are discussing for Laurus is is not when the price is 600 plus. The price is at 300. So compare Sequent with Laurus, where the price has corrected significantly. I said something for Sequent that, what are the earnings triggers going forward, because market rewards the forward rate of change. I will say exactly the same thing for Laurus, because the price is not at 600 today. Market has already discounted a lot of it. Now, what I need to figure out for Laurus is, do I have serious earnings triggers over the next 2, 3, 4 years? And in my humble opinion, again, we are all learning. We have got our own biases. We could be wrong. I believe that CDMO space on the NCE side will surprise even the bulls like myself. And that game will probably start in the second half of current fiscal. So somewhere from the 3Q of FY24, the current fiscal. Next 2, 3 quarters have already been discounted that the earnings are not coming, and that's the reason the price is not at 650. The price is at 300 or wherever it is. But I see the earnings trajectory changing going forward. And I'm happy to wait at 250 or 300 zone, because I expect the consolidation to be here until the majority of the market is in the same camp where I am, that the earnings are about to recover. And then the animal contract is a large contract on the animal CDMO. Then they've got agro CDMO. So PI, as an example, has struggled to get into pharma CDMO. Laurus has not struggled to get into agro CDMO. And now they are talking about nutraceutical. There is hardly any CDMO outsourcing happening in nutraceutical today. That's a large space. Laurus has got competence there. Cosmeceuticals is another area. Precision fermentation and bio enzymes, so on and so forth. So I'm more interested in what could change the earnings trajectory over the next 2, 3, 4 years. And ARV's contribution or dominance will continue to slide. That's my view. So price has halved because the discounting has already happened. Maybe price will stay in this range of 250 to 300 for next couple of quarters. Difficult to predict the extreme short term. But do I see earnings recovering materially from later half of the current fiscal? I believe so. But I would like to see what Aditya and others think.
So I think rather than commenting on Laura's side, at least answer your question on the injectable side. So Sajal told you then there is a cost, the other is there is convenience. The third part is if you see ARV consumption globally, right? The majority of the volume happens in LMIC countries, low and middle income countries. Because see, at one time, just like COVID, even HIV was a pandemic, and now it has become an endemic. So, uh, countries where this endemic continues to wreak havoc is more like Africa, more like certain Asian countries. It is less of a Western world problem. It is more of a Eastern world problem today. But yeah, even the Western world has it. Not to say they don't have it, but less of their problem. So the point is that majority of the countries that actually consume a bulk of the ARV volume, those countries are poor countries. Those countries are low capita income countries. They cannot and they do not afford expensive treatments. The tablet, I think in one day a patient has to take 5 tablets or 4 tablets, and let's say the tablet is about $1 a tablet. The injection is one a week. So tablet cost for the week is, they say, $28 to $35. The injection cost $150. So the treatment cost for the patient is like 5 6 times. So even though it's just once a week and it's a injection that you can't take at home, you have to every time visit a nursing home or a hospital where you have some professional sort of giving you the injection. So cost and convenience both are such difficult animals in this case, in this particular case, that I wouldn't expect a majority of the ARV volume to shift to injectables. Yes, certain markets, certain category of population will shift. Will that move the needle materially? We don't know. I wouldn't expect so.
Right, sir. Yeah, I'm audible.
Yeah, yeah, you are.
Yeah, so yes sir, and 100% correct sir, because ये मैंने Q4 FY20 का भी बिफोर आई केम हियर, तो मैंने वहीं पे देखा था कि एक एनालिस्ट ने भी यही पूछा था कि आई थिंक सो दैट इंजेक्टेबल इज अ कॉम्बिनेशन ऑफ कैबोटेग्राविर और रिल, एक रिल्पिविरिन करके कुछ है। तो उसमें भी लॉरस सेड द सेम थिंग दैट अफ्रीका में हमको लगता नहीं कि अफ्रीकन मार्केट में नहीं लगता ये आएगा मोस्टली, दैट्स व्हाई हु ने भी रिकमेंड नहीं किया था तब। तो यस सर, सो इट इज मोस्टली अबाउट एलएमआईसी कंट्रीज, तो उधर तो मतलब इट्स मतलब इंजेक्टेबल सोचना भी इट्स वेरी टफ, मतलब द प्राइसिंग पॉइंट इज सच। राइट सर, थैंक यू
Correct.
सर, थैंक्स अ लॉट सर, आई मीन दैट वाज अमेजिंग सर, थैंक यू सर।
Thank you, Shubham. And next set of questions are on hospital. So the question is, when most hospital business has good run, what's lagging in HCG even after most of the capex is over? Also, what's your view on entire oncology sector on healthcare? Is Narayan Hirudale entry into the space will be successful? Any views on that?
So I'll take HCG again, trying to avoid talking about stocks here, but what's ailing the stock, I don't know and I can't comment. Uh, what I can say is that if you look at the earnings of the company, and again, when I say earnings, I mean cash flow. I don't mean EPS. So the cash flow is healthy, and we have no reason to believe, at least today, that the cash flow can deviate from what it has been doing over the past several quarters now. Um, and stock price performance is also a matter of perspective. Uh, had you seen the stock price performance over 3.5 years, I think it's 4x from where it was 3.5 years back. But if you look at last 1 year, then you get a different picture. So it's also a matter of perspective, honestly. Lastly, on the entry of competition by different multi-specialty chains into oncology, that is nothing new. Apollo entered the oncology space, I think, back in 2017 or 16 with proton therapy, and there was a huge amount of uh, you know uh, excitement regarding that proton therapy launched by Apollo, and they have been partially successful there. But that has made no difference to HCG because the market is so huge, right? That there is space for everyone to play, and therefore a little bit of competition here and there doesn't really matter to that extent.
Sajal sir, any comments from your side?
No. The expert has spoken on the hospital, so I've got nothing to add. But yeah, definitely on cash flows. Yeah, never look at this PNL EPS. I can show you any EPS. Doesn't mean anything. Show me the cash flows, cash flows, cash flows, cash flows.
And another question, Aditya sir, is like, is the hospital as a sector now a crowded trade? And also, like, if we were to talk about hospitals, what is the sell strategy?
So look, is it a crowded trade or not? How do I identify that, right? So there are two ways of identifying it. In fact, there's one way that I will talk about. The second way I can't talk about. But one way I can talk about is if you look at the valuations, right? Now, if you look at, let's say, globally, the valuations of hospitals in emerging markets, right? Majority of these emerging market hospitals trade anywhere between 18 to 25 times EV/EBITDA. Now, again, why we look at EV/EBITDA is because hospitals generally tend to have more depreciation. They tend to be asset heavy. So, which is why we look at EV/EBITDA, not PE multiples in hospitals. But yeah, so that's the valuation that globally most hospitals trade at, especially in emerging markets. So, so if you look at, let's say, different hospitals listed in India, some of them which are larger are trading at significantly higher than this range, and some of them which are smaller are significantly below this range, right? So the clear, therefore, takeaway from doing that exercise could be that buy the smaller ones and hold them till they become larger. So one, you obviously get earnings growth. If the smaller ones were to become larger, they will report more earnings going into the future. And two, you get a re-rating because as they become larger, they'll get re-rated as stocks because the ones which have already become larger are trading at significant premiums to the ones which are smaller. And that's regardless of the business model, whether it's super specialty, multi specialty, none of that matters to the street as I see it, as the data tells me today. It should matter fundamentally, but it doesn't apparently because liquidity is a major challenge. And if liquidity in a good asset is a challenge, then money will chase the not so good asset, which gives liquidity. That is the takeaway that I have today from what is happening in the market, to be honest. Um, Now, coming to the cell thesis, I think in hospitals there are two, three different kinds of cell theses. One is obviously a hygiene check, a sanity check on the numbers, right? So your promoter should be clean, your cash flow should be clean, your gross block, related party transactions, interest cost, all that should work out. Those ratios should work out. Um, if they don't, you don't even buy it, so forget about selling it. Uh, for something that you own, when do you sell? One, if it becomes too expensive to own. Now, the definition of too expensive is again to each his own, and for each stock different. So therefore, you'll have to work on that as to what will be too expensive a valuation to own it. Uh, Secondly, so there needs to be a discipline in investing in terms of valuation, right? You can't. Uh, Not all great businesses will give you great returns if you don't buy them at good valuations. I think there are certain PMSs in our country which buy stocks at ridiculous valuations, and you have seen the kind of performance they've delivered. So that kind of style will work at some times, but majority of the times, those kind of styles do not work. Um, so you have to look at the valuation at which you're holding it, and if that valuation to you at least makes sense to hold. Secondly, the sell thesis generally is around capex. So again, generally hospitals when they do capex, they borrow money, they buy assets. The new hospitals take time to break even, generate losses in the near term. So if you're a patient shareholder, then even that is not a problem. But if you are like a year, 2 year, 3 year shareholder, then maybe that is a time where you can reevaluate whether you want to still hold on to if there is a capex cycle coming for the hospital.
Right, sir. Sajal sir,
No,
any input, sir?
absolutely. No, yeah. Just to add my 2 cents on the crowded trade comment. I I'm talking about the last 20 years. There are three clear pockets of crowded trades that have been crowded or much followed and discovered over the last 20 years. I'm not talking about 2 years, I'm talking about 20 years. So banks and financials, Kotak and HDFC and likes, they have been a crowded trade. And FMCG stocks, all of them have been crowded, well discovered. IT services. So whether to approach a business is not a function of whether it's a crowded or a well discovered. It's a function of what's the forward rate of change and how sustainable and predictable the earnings trajectory likely be. We look at the transactions that are happening in the hospital space today. The idiots are not buying, and it's a long-term capital that is coming into this space. The corrections and 1 or 2 quarters plus or minus, that's part and parcel. I mean, today the IT services is not performing. Will they never perform? Answer is no. The banks like HDFC and Kotak, they were going nowhere for the last couple of years. That doesn't change the 20-year track record. The FMCG stocks, Nestle, Britannia, they've been struggling consolidating Godrej consumer for a while. But they've started performing, they will perform because they've got history, right? So that's what all I wanted to add.
Right, sir. So, Lakshay, you got a similar question on the discussion or any new question because we already have questions. So, yeah.
Okay, thanks again for the chance. Actually, I had a like I wanted to add on to that topic itself. Like, if we want to check hospitals, so I also wanted to ask that the ARPOB, like average revenue per operational bed. So that is also like a right metric to track for hospitals, right? And secondly, second question was that again to check a hospital, for example, if it's doing a brownfield capex or a greenfield capex. So in terms of brownfield capex, generally the turnaround period for the revenues to start generating is like the time frame is less compared to a greenfield capex. And again, secondly, it's more like that it carries an add-on risk that if it's a greenfield capex in a new city, then how it would turn around. So all of these uncertainties would also add on to the risk, right? So this is my question.
No, so they do, yeah. I mean, you're absolutely right. First of all, the definition of RPOB is not per operational bed, it is per occupied bed. So if a hospital has 100 operational beds and the occupancy ratio is 60 and they earn 60 crore rupees, then the RPOB is 1 crore, which is 60 crores divided by 60 occupied beds and not operational beds. But that aside, I mean, that I just wanted to make sure that you have the right definition.
Yeah, thank you.
Uh, on the second side, see, brownfield capex is generally turned to be asset light because you already have infrastructure, you already have a catchment area, you already have a marketing team, so investment wouldn't be as much, and the turnaround will be faster. No doubt about that. Greenfield tends to be more asset intensive, more opex intensive, as well as longer time taking. So that's absolutely fair on your part to say. When I generally say capex cycle, I generally refer to greenfield capex because brownfield capex though is like a line extension. It keeps happening everywhere, and that's not something which is generally a material capex number. It is generally a very small capex number, brownfield, right? So yeah, but if you want to call
Yeah,
it out, I think brownfield capex is not something which is a sell thesis. Generally, sell thesis tend to be large greenfield capexes for hospitals.
because that would create the uncertainty, right?
Yeah, greenfield will always create uncertainty because वहाँ catchment area नया है, so doctor sourcing, patient sourcing, network building, brand building, all that takes time and money.
Yeah,
And so again, losses will come for the near few quarters, and then maybe break even, and then maybe profits. ROE will get depressed because assets will have to be bought. Balance sheet will get depressed. Interest cost will go up. So all those things start happening.
understood, understood. Yeah,
And just to add on that greenfield, brownfield. So if you take Narayana as an example, their Bangalore center has got plenty of spare capacity land wise, so they can multiply capacity significantly using the brownfield capex on the Bangalore side, where their brand is very well established, right? So those things have to be considered as well. I don't think Narayana is utilizing enough of their existing land parcel that they have in Bangalore. You need
got
to
it.
you need to maybe double check on that one.
Yes, I guess Sajal sir, you're correct. Like, still the brownfield capex over here, there's a lot of opportunity left in Bangalore. And also, like, what are your views regarding the Rainbow Hospital? Because considering it's like a childcare specialty hospital, so and there are like few competition which it has, so the runway it has for the coming 5 years per se.
No, so
Uh,
yeah, go on, Aditya.
yeah, sorry. So I think, look, childcare is again a super specialty business to be in. What I will disagree with is that there is less competition. I think listed space में competition नहीं है childcare में, but in the unorganized space, in standalone spaces, there are a lot of hospitals, I think in metro especially, which are dedicated childcare hospitals. So there is competition in the business, but there is no competition in the stock in that space. Just like, let's say, in oncology super specialty, there is one stock. In childcare super specialty, there is just one stock. So that there I agree that there is no competition in the listed space. But look, super specialty businesses again globally are valued higher than multi-specialty businesses and within hospitals. In India, that's just not the case just yet. Why not? Because again, scale. So multi-specialty hospitals are larger scale, more liquid stocks. Funds find it easier to buy. Super specialty today are not as scaled up businesses, so not as large a market cap, not as liquid, and therefore difficult to buy or difficult to participate, even if you like them. Um, so that's where I think the dichotomy exists, and this is a technical dichotomy. This will correct itself over the course of time. But yeah, when I say course of time, it could be 2 years, could be 5 years, could be 10 years, depending on how fast these super specialty grow and how fast their liquidity grows, so that the funds can really participate in the story. Uh, was that your question, or did I deviate from the topic?
No, it was something related to that itself. But I was also asking regarding the some thesis pointers according to you, because like one of my sisters, she works over there in the Hyderabad Rainbow Hospital, and she says that the
Right.
demand is like for the past few months, it's always been there, and like there's always a
Yeah.
demand for the doctor itself. So I
Yeah.
guess Hyderabad is one of the best also in Rainbow Hospital, apart
Right.
from Bangalore. But so I think the business model is pretty strong. But if there are any thesis or antithesis pointers which you could specifically point at, which could be tracked.
नहीं specifically कुछ नहीं है. I think again, as I said, just be careful of valuations. Okay, so some of these stories, especially recent IPO stories, tend to be overhyped, right? We saw that with all the
Yeah,
digital age
right.
companies getting listed, right? So be careful of valuations. Buy at the right valuation. See, if you don't buy at the right valuation, it's not suicide, but then you require to be more patient. Then you require to wait for 2 years, 3 years, 5 years
Yeah,
to get
totally.
good returns, right? But if you buy them at the right valuation, then your holding period could be lower and your XIRR could be higher. To be honest, so I am in the business of managing other people money. Other people are generally not very patient with me. So I
Hello,
I
Sorry, I
think
guess.
Aditya sir
we
got
lost
dropped.
you, Aditya.
Let's wait.
Yeah, I don't know. I think
Okay,
we lost. So
I
yes,
think
just to add my couple of points here. Valuation definitely is one factor. And again, as I said, is the forward rate of change. Can the 32% margin come to 28%? That's a 400 bips rate of change on the downside. Or are you playing for 32% operating margins to go to 36% and stay there? Because that would be the other side of the 400 basis points margin improvement. So, just be aware of, what you think the next year or two, at least the next year or two would happen from this point onwards. Because if you are holding a stock, that means you're buying it, you're not selling it. So the future has to be at least similar to what it is today, if not better. And then secondly, on the um, children hospital side, I agree it's a specialty, but there is an emotional angle there. Compare that with an oncology, which is again also a specialty technology driven asset. There is emotional, plus there is also a mandatory life saving angle there. So the the pull on the oncology side of specialty should be more than the child care side of specialty, in my view.
Okay, understood. Okay.
Thanks for the opportunity.
I
Thank you.
think Shubham has
Uh,
a question. He's raising his.
Aditya is not joined yet. So will the yeah, Shubham, quickly you can unmute and ask questions.
Yeah, just a small question, sir. Sir, I think you mentioned a number like capex as a like new capex as a percentage of gross current gross block or net block. At what percentage would you be uncomfortable? That if this
हाँ
for example,
हाँ मैं
right,
समझ
sir?
गया क्वेश्चन मैंने कई बार ये एग्जांपल लिया है एंड आई वुड लाइक टू इनवाइट आदित्य एज वेल बिकॉज उनकी हॉस्पिटल्स में बेटर अंडरस्टैंडिंग है इन माय व्यू एनीथिंग अबव 20% ऑफ द करंट ग्रॉस ब्लॉक द इंक्रीमेंटल न्यू कैपेक्स इफ दैट इज more than 20% of the current gross block then there is a decent risk of a material deleveraging or the negative operating leverage to start playing out when that incremental capex goes online. 20% would be my sort of absolute threshold. The lower the better. So if I've got 10,000 bed hospital and if I'm putting another 3,000 bed, that will cause some sort of deleverage when all those beds are operational because unless you can take them operational in phases. So yeah, I've got 10,000 bed hospital and I only add 500 in year one and then maybe 2 years later I will add another 500. So you will start breaking even on the first tranche of a new addition and then you will add a subsequent 500,000 so on and so forth. If you are adding a big bang that you have got a 10,000 bed hospital and you are adding another 5,000, 4,000 beds on day one, then significantly there would be significant margin erosion. It's no rocket science. I would like to see what Aditya, is there any sort of metric that you use for new capex divided by existing gross block?
No, there isn't. I'll tell you why. So let's say hospital A has 100 beds currently, and they say they are going to add 200 beds, but they're going to add 200 beds over the next 10 years. So that's 20 beds a year. So even on a 100 bed base, 20 additional beds may not make that much of a dent, you know. But if let's say there's a hospital which has 100 beds, another hospital which has 100 beds is going to add 60 beds, but is going to add 60 beds over the next 1 year. Now that will make a significant dent. So you have to see the rate of change here, right? Something like an Apollo hospital between 2010 to 14, I think, they added about 400 beds a year on the base, which used to be about 2-3 thousand beds. Now that was a problematic time for them. The stock went nowhere for 4-5 years. Now, if today Apollo adds 400-500 beds a year on a base of 11-12 thousand beds, doesn't even matter, right? It wouldn't even reflect in the margin profile. So you have to see the base, you have to see how much they're adding and what is this rate of adding. And if the rate of adding is more than, let's say, 20-30% of the current capacity, then you should expect some deleverage, especially if majority of the addition is greenfield.
Thank you, sir. Thank you, sir.
Thank you, Shubham. So next question is, what is the reason that China are not able to make big in antibiotics drugs? Is it because they are more focused on new age biologics drug or India cost competitiveness? Also, what's your thought on Copran future capex? Will it be able to take advantage of its niche positioning in carbapenem?
No, I mean I can start. And China is still dominating the antibiotic supply chain in terms of the starting raw materials. China was always interested in the CDMO and the biologics. So they started this journey about 20-25 years back. So Wuxi Aptech started operations around 22 years back from a very small lab. I think 7,000 square feet, if I'm not mistaken. Very small lab, right? But they got local regulatory support to grow exponentially versus a Syngene, which kind of started around the same time as Wuxi Aptech. So Wuxi Aptech was not Wuxi Aptech on day one. It was Wuxi Pharma Tech. Then because they got local support, they started cash flow generation faster than Syngene and they started acquiring companies in the US. And so they acquired this company Aptech. So Pharma Tech became Aptech, right? But in India, the regulatory support for the clinical trials, etc., is nowhere comparable to what the Chinese government offered. So unless you get that regulatory framework sorted, why would MNCs come and do clinical trials in your country? They will. They are paying significant premium for clinical trials in developed economies, because the framework in India is not supporting, and that's kind of it's getting reflected over the journey of two businesses that kind of started around the same time in 2000. I think Syngene started before 2000. If you read the older annual reports of Biocon, or even if you Google, I think Syngene started somewhere around mid 90s, if I'm not mistaken, 96 or something. So Syngene had a head start compared to Wuxi, and still Wuxi is significantly bigger and dominant. It's because of the local Chinese government. They've supported their industry. Indian government, the older Indian government, the UPA regime, UPA 1, UPA 2, unfortunately, they were never as supportive. But even the current structure of the regulatory structure of framework on the clinical trials side is a lot of improvement required. But yeah, on the antibiotic side, I think China is still, they control the back end, which is again, it's a weapon for them. In a war-like situation, they can choke you. They will choke you. Why will they not? It's their drone. Why will they not use it? They have to. They should. They would be stupid idiots if they don't use it. They will use medicine supply chain as a weapon, and that's a national security risk. You accept it or not?
Russia used
National
gas and
security.
energy, no? Russia used gas and
हाँ,
energy.
करेंगे ही ना, क्यों नहीं करेंगे? बेवकूफ थोड़े हैं ये लोग. You think that drones will save you? Drones alone will not save you. So that risk is there, loud and clear, well documented risk. Uh, Question on coming on Copran. Copran is a generic business, so again regulatory. They've been struggling to commercialize and operationalize their Panoli plant. The Gujarat regulatory landscape, the election, and all the rest of it that delayed their plans. I don't expect current quarter, this fourth quarter, or FY23 is a complete washout for them. And that's the reason the stock corrected all the way from 300 plus 200. And again, the incremental rate of change do we expect FY24 to be better than FY23? I mean, certainly do. But then the stock is also 50% up now.
Right, sir. So Aditya sir, shall we take next question?
No, nothing to add. Nothing.
So next question is around how is the competitive intensity in the agro CDMO space? Do players like Deccan Life Sciences pose a threat to companies of the like of Heikel, considering they have so many innovator agro partners? Is the tech transfer as difficult as it is in pharma CDMO?
No. I think the answer is itself in the question itself. I mean, the entry barriers. I wrote a long thread on the barriers to entry in the agro space versus the pharma space. The entry barriers in the agro space are relatively lower. That's the reason it's relatively easy for Laurus to enter into agro, and it's so difficult for PI Industries to enter into pharma CDMO. I don't know if there are any. So I haven't checked the company's uh, books on what kind of scale up year over year. Deccan Fine, it's a good company, but because it's not publicly listed, we have got very little information about them. But they are not the only player in the agro, and no innovator will give you all the molecules. You may be the Amitabh Bachchan of your industry in CDMO space, but think from my perspective, I'm the innovator. Why will I risk my supply chain by awarding everything to you? I'll distribute it. Portfolio management. Why will I invest in one stock? Why not 15? Same approach I will do for my supply chain management as well. So Laurus is entering into CDMO. I think that others like PI and Deccan, they have to take note of that. I would be really stupid if I ignore, a player as hungry and as hungry for growth as Laurus entering agro. Heikel is again well entrenched, so they've got every reason to take, some um, future pipeline share. Syngene is also, not many people know it. They support innovators on the agro side as well. So, but honest answer is the barriers to entry on the agro side, anything other than the life side of things. Human pharma NCE and followed by animal pharma NCE. These are the top two in terms of the stringent regulatory controls and the entry barriers. Everything else is further down the entry barrier uh, curve.
Aditya sir?
Nothing to add here. I think Sajal covered it well. I think pharma CDMO, human pharma CDMO is definitely appears to be a higher entry barrier business than, let's say, agro. That I think is pretty much clear. That's got to do more with the size of the molecules, the regulations around the innovation, the cost of the innovation, and et cetera, et cetera. So multiple things lead to that conclusion, but the conclusion is broadly same for me.
Another similar question is like, what should we look while investing in agrochemicals? Should we look at a pure play agrochemical innovators or a mix of agrochemicals and fertilizers?
So should I only invest in CDMO or should I invest in hospitals, branded generics, FMCG and CDMO? What is a better strategy? So a 360-degree player in CDMO is a better than a single domain CDMO player. That's the right answer. Diversify, do everything. Do nutraceutical, do cosmeceutical, do synthetic biology, do human CDMO, do animal CDMO, do as much as you can, so that because you cannot scale up just by leveraging a single domain. If you are operating in 7 8 domains across the CDMO, then you can have 2 billion 3 billion kind of top line purely from CDMO over a period of time.
Right. Although, like we have discussed numerous times on this, but again, if we have one question, I read it out. With three different businesses and two of them with steady cash flows, isn't Piramal Pharma a solid buy and hold with 3 to 5 years view at these levels?
See, I would definitely like Aditya's view on Piramal because I've already spoken a lot about Piramal. But I'll say, you multiply a large number with zero, you get a zero, and that zero is the function of the management, and that's the reason I use that Jackson Paul Pharma example, because it's the management. Everything is a derivative of management, and you know what? Warren Buffett knew that pharma exports is not a business that any idiot can run. Warren knew that. He never he was never interested in the pharma exports for that reason, because he always says that buy a business as that any idiot can run it, because sooner or later an idiot would. And we have seen few examples we in this session where the management change, it's a zero or one. So Piramal is one such example. Sequent is another example, right? Then there are other examples. So I would like to mention about another example, uh, a business where we haven't spoken much about. So let's say Pharmova as an example. And again, a disclaimer is just an opinion, because there is very interesting one or two pointers that I would like to highlight, though I did that in the last year, the Delhi in-person webinar, the auditorium session. Just to quickly summarize, the point is, I mean, Pharmova has two great quality businesses. in CRDMO and specialty that includes the branded allergy drugs in the US as well as the nuclear medicine. And the CRDMO, the specialty including the nuclear, these are seriously great businesses if you look at the margins and the sustainability of those margins. But the cash flow from these two is keeping the other businesses alive, but only in comma. I mean, those businesses, the generics, as well as this, this obsession of launching the NC using shareholders' money. And many companies have that obsession in India, unfortunately. Glenmark has that obsession, or Biocon, oral insulin, 15, 20 years it took, and then they accepted, okay, yaar, nahi ho payega. Suven Life, that is demerged, so and Sun Pharma, they demerged Spark, so at least the shareholders of Sun Pharma are not getting penalized, whereas the shareholders of Glenmark Pharma are getting penalized because of that innovative, that pipeline that they have, right? What is the output? I mean, Glenmark Pharma used to be a beautiful business. If you track them from 90s all the way to around 2005-6, excellent runway, but nothing since. It's because of this obsession with NC, and Pharmova has got the same thing. They're burning their own cash in NC. Plus, somewhere you are just a kind of conflicting. There's a conflict of interest with the innovators as well. That you are also doing innovator synthesis using your own IP, and you're also using our IP as well. I know they've clarified that a couple of times on the earnings call that we do different things and we don't interfere with the innovator side of so we don't work on the same therapies in our own discovery, our own IP. Um, but I would still be very skeptical as an innovator. If you stop doing that, or at least, I mean, the best thing is to stop doing, because you're burning cash and it's a significant burn. I generally don't like those businesses. I know there's a rate of, see, from 1 in 10,000 molecules they go commercial. Most of the molecules they fail. I want to be in a business that makes money even when the molecule is failing. The fee for service model or the CDMO model. I don't like burning my own cash. I want to burn someone else's cash and let them enjoy the upside. But that upside will be, the tail event that Talib. So you should. That's why I say you should read Talib's books, all of them. And he's been vocal for the last 15 years, 10 years on this. And he kind of drove me away from playing this innovator. I used to have a very significant obsession with oral insulin ban jayega, and I'll be the king as a shareholder. It doesn't work that way, unfortunately. Aditya, on CRDMO, Pharmova, anything to add?
No, I think it's a beautiful business, to be honest. Looks capability wise looks excellent. Um, Obviously, there are elements to the other businesses that they run, and a stock price will be a function of how they do across, because all of them are available in one listed entity. Um, but I think, yeah, I mean, I can't say much. Barring that, I think they have the right capabilities, they have the right frameworks. They don't probably manage capital allocation that well. Um, and I think that is where the key to their value unlocking lies. Um, the moment capital allocation gets better, um, then the company can be a very, very good company to look at. But till that happens, there will be this challenge of cash being generated from one business and burnt into other businesses.
No, but if I compare Newland CDMO with Pharmova CDMO, Newland is not doing own NCE research, so they are not. There is no conflict of interest. Whereas in Pharmova, there is a clear conflict of interest.
Yeah, there is, and you know what that does? That also restricts the number of clients you can onboard. So let's say I do oncology NCE research, and my current client profile is all nephrology and cardiology and no oncology. But then there are multiple innovators in the world who do only oncology or also do oncology. then those innovators will probably be hesitant to come to me because I am a competitor in the innovation space for them, right? See, that is where DVs became a very large API player, and other API players could not scale up to that level because the other API players. So at one time, Dr. Reddy's API revenue was higher than DV's.
Hmm.
Then Dr. Reddy's entered into manufacturing generics themselves, the finished dosage formulation.
Aurobindo as well.
Aurobindo as well. Now, that is the time when the guys who were giving them Tevas, Mylan, Sandoz of the world, who were giving them orders for generic APIs, they said he's also competing with me in the formulation space. So how can I rely on him as a partner for the generic API? And that is where they started backward integrating, or they started getting other vendors from Eastern Europe, Central Europe, and China and all. And that restricted the growth of Dr. Reddy's on an Aurobindo. And Divi's never entered into the finished dosage formulation space, so they were a very very clear choice. Um, so clearly that dynamic plays against them. Um, does hiving off a business satisfy the customer? Maybe, maybe not. Depends on the lens of the customer, how he looks at it. I would still be skeptical, even if they hived off. If it's the same group engaged in the same business, I would still be skeptical. But yeah, I mean that depends on an individual's lens, to be honest.
Exactly. If you stop that NCE research, you save the cash flow. You can scale up your partnership, CDMO partnership model significantly. There's a large opportunity there. I know they have spoken about expanding in the Genome Valley, Hyderabad area. I think it's a much cleaner model. And just for comparison, guys, Jubilant were into CDMO back end of 90s, so they kind of started before Wuxi, but it was, the aspiration to do many things and not focus on one single thing. Otherwise, that if had they continued just on the CDMO side, they probably would have been much more bigger, dominant, large cap, pure play CDMO today.
But that's the genetics of the Jubilant group, na Sajal Bhai. You look at them; they have Jubilant Foodworks, they have Jubilant Pharma, Jubilant Ingravia. Then they have other Jubilant entities which are not even listed, private businesses.
Mm,
So that is where reading of the management becomes very very important as a potential investor or as a current investor. Where you read the DNA of the management, now they can say I am focused on CRDMO. That's a great statement to make. But look at what they're saying and what they're doing, right? I mean, that
mm,
is a very clear gap in what in such cases specifically. They have 7 or 8 businesses. Yeah, the 3 of them are listed. The other 4, 5 are unlisted businesses, and a couple of them are under NCLT. So you have to understand the genetic of the management as well.
mm.
And you have to take a educated bet there. See, investing is probabilistic, no doubt, but I think people in general miss out on data points. At least where there is data, you should take data, and then you have probabilities to help you out. Uh, but where data is available and not looking at it and just hazarding guesses, I think that's one being lazy to just not doing justice to the art of investing.
Absolutely, absolutely. I couldn't agree more.
So, Sajal,
Next one. Oh,
yeah, most of the questions which we decided have been taken. There are few more questions, so if you guys allow, we can.
Prince, you said something. I think your voice broke. Yeah.
Yeah.
he said most of the questions that we selected the best and are out of the way. There are other few smaller questions, and of course, we need to discuss the Mankind IPO and the other players in the listed space, right? So we saw the volumes exploding on the FDC last trading day, right? Friday. And I think that there's this ripple effect of an IPO coming at a much higher valuation, and FDC is a dominant India-centric franchise, just like Jackson Park and Eris, right? So we need to discuss that as well. But maybe we can quickly look at, are there any interesting questions? If you read them out, if there is anything interesting worth answering, I'll Aditya and myself will pick it up.
Right. So, Aditya sir, this question is for you. Like views on the molecular diagnostic space.
Prince, we can't hear you, if you are speaking.
Sajal sir,
He's saying views on the molecular diagnostics. I can hear you, Prince. Can you hear me, Aditya?
I can hear you, Sajal, but I can't hear Prince for some reason.
Maybe
Right.
some.
So Prince, you asked the question. I'll replay it back to Aditya.
Oh, okay, okay. So views on the molecular diagnostic space, PCR kits or NGS based kit in the row, Europe to be specific.
So molecular diagnostic space, PCR based kits going into Europe. That's the question, Prince.
Right, sir.
Aditya, if you got the question.
I didn't get the question, but yeah, molecular diagnostics going into Europe. So
PCR kits in to be specific.
so look, RT-PCR COVID related sales, that is obviously behind. Hopefully behind. Hopefully we'll have no more huge waves. But yeah, molecular diagnostics have a very large application beyond COVID. So does genomics, so does sequencing, genome sequencing. Uh, I think diagnostics as a area is still very nascent on its evolution cycle. We all have to appreciate this that 20 to 25% of the human anatomy is what is explained by medical science today. 75 to 80% of the human anatomy is unexplained by medical science. For instance, they can't tell you how two nerves communicate amongst each other. The nerves which don't touch each other, how do they communicate? How does one nerve tell the other nerve what to do, and how is the message carried toward the body? Medical science has not been able to explain that yet. So therefore, neurologists are generally guessing in their field. Anyways, that's apart from the point. The point is that it's a very very emerging field. There are lot more applications beyond COVID. Uh, Very very exciting area. A lot of private equity money, venture capital getting into the area. Um, we saw HCG, I think, spoke of that business. They have incubation in their hospital of that business because oncology would be one of the first areas where such sciences will be applied. Generally, oncology is the area where majority of the sciences are tested first because their patients still die. So they're trying to see if they can prolong the patient survival rate as much as they can. So I think a lot of potential left. But again, as an investor, when you look at it, you should ask yourself the question. See, saying that I am a long term slash patient investor is very, very, very easy. I think probably the easiest and the most fanciest thing to say today. Being a long term and a patient investor, trust me, a completely different ball game. Trust me on that. Just take my word for it. And I handle like hundreds of investors. I can tell you 99% tell me that they are long term investors, and in reality, maybe 5% are or 10% are at best. So clearly, if you want to enter or if you want to invest as an investor into emerging areas, uh, and if you have identified a good emerging area, and if you're correct in your assessment, it will be a huge multi-bagger for you. But it will take a long period of time. Science in medical science specifically evolves extremely slowly. The human body is extremely complex. And so are some of these technologies which are trying to address it. And therefore, the realization of your returns will be very, very, very back ended. So be prepared for that, is all I want to convey as a message. Sajal bhai, I will leave the spaces and maybe join back in. I want to hear Prince's questions directly.
No,
So
definitely. I will hold the fort in your absence, but do come back quickly because we need your expertise on this mankind thing. I will just quickly add few things on that long term thing that Aditya mentioned. Na? So everyone is a long term investor in a rising market. Rising tide, जब तक stock आगे चल रहा है ना, everyone is a long term investor. वो पिछली साइकिल में नहीं था, लॉरस को देख लो, न्यूलैंड को देख लो, जब तक वो स्टॉक ऊपर ही जा रहे थे, एवरीवन वाज लॉन्ग टर्म इन्वेस्टर इन देयर. द मोमेंट दे रिवर्स, न्यूलैंड कमिंग फ्रॉम 2500 to 1000, कोई लॉन्ग टर्म नहीं था. एवरीवन एवरीवन अंडरस्टूड व्हाट a lumpy business would look like. It will bite your bum. So I fully agree with Aditya on that. Just a couple of points to add on this molecular diagnosis. So I've covered this in detail on my Unseen Bio webinar. You can just search on Google Unseen friends in bio, and you'll get the link. It's on YouTube anyway. There are two things. There is a genomics and there is epigenetics. Think of it as a software hardware. So your genomics is the hardware, the epigenetics is the software on top of that. The anomalies or the issues on the epigenetic side, you can clear, you can correct without any medication, just by making some lifestyle changes like fasting, yoga, walking, you know, going and spending some time on the hills, away from pollution, and so on and so forth. So epigenetics is easy to control on the genomic side, because it's the problem in your hardware, in your digital ATCG, the coding, right? That's where the problem is. And the other problem with genomics is that if you look at the sequencing, the database that has been sequenced, majority of the people are from European descent. Majority of them. There is hardly any representation from the Africans, the blacks and the Asians in that. So single digit, low single digit kind of thing. So even if you go for your gene sequencing thing, you will not get the result, the desired result, because majority of the population is not fairly represented today. So this will take another decade or maybe 5, 7 years, unfortunately. And a lot of companies, even Reliance, are active in this space. But I don't expect any sort of immediate uh, big bang success in this space.
Right, sir. So one question I think we have discussed previously also, but I read it out. If you think it is easy to answer, we can take that. So Biocon holds approx half of Syngene, and it's has its own generic business, plus now have entered into biologics, which is doing really good. But still, there is so much discount going on Biocon. Getting the valuation of pure play holding company. What is that I'm missing?
Um, some of the parts, that's it's not a pure play. The other issue that the investors have, or concern that the investors have today on the Biocon, is on the balance sheet clearly. So they have to sell good parts of the business just to keep the relatively not so good part alive, right? So they have been selling the stake on Syngene just to get some cash. Um, Generics, I mean, so Biocon has been in a significant transformation. So they started from industrial enzymes. Then they moved into the generic side, the statins based, fermentation based APIs, right? And then those cash flows funded the expansion of Syngene, and then Syngene was independently listed with a net cash on books balance sheet, very different looking balance sheet from Biocon console entity. Um, the challenges that I see on the Biocon side is the regulatory as well, because it's a sterile space, right? So biologics is also a sterile space, and regulatory landscape is not very benign there. I mean, the contamination and those kind of sterility risk is significant. Every company has struggled, and that's the reason I was very skeptical with even Gland Pharma, with the kind of valuations that it was enjoying after the IPO and the chatter. It's the risk is there. Just because the risk has not precipitated, you think the risk is not there. It's like that. That's why I keep saying that you should read more of these Talib type books rather than the purely on the One Up on Wall Street and Warren and Munger. I mean, they are good books, but try and do some other kind of um, reading as well. So there is, Taleb has got good fool. Read Fooled by Randomness. Read Anti-Fragility, read Black Swan, read Skin in the Game. There's a whole host of collection. I'm sure you'll enjoy reading those, and you'll start appreciating the business, intrinsic quality of the business a lot better. Once you have had at least 3-4 readings of these books. Unfortunately, one reading is not enough. Is you have to you know live and breathe those books, unfortunately, a few times. I think Taleb is one of those people who is a kind of a living legend. He's a living philosopher. There are not that many people of that caliber. But coming back to Biocon, I think वो challenges मुझे दिखते हैं थोड़ा balance sheet पे, और it's a sum of the parts business. So um, if they demerge the biologics business, IP or otherwise, then I think the interest will probably come back into Biocon, because then they can they will get some cash from that IPO, and then they can invest more behind this Vizag and the expansion on the fermentation side, because there's a huge opportunity. Um, so I would like to revisit Biocon after that biologics transaction, the biosimilar transaction is out of the way, but not at the moment. I mean, I'm much more comfortable in Syngene, because I see significant earnings fraction going into FY24 and FY25, because some of the negative operating leverage that Syngene has been suffering with should start reversing. Aditya, I know you have spoken a lot about both Gland and Biocon's biosimilar business, and I mean, if stock price and the earnings and cash flows is anything to go by, I mean, you have been spot on. Anything to add from this point onwards? The reason I'm asking is now that भाव टूट गया है, तो भाव भगवान है कि नहीं है अभी?
Uh, so again, stock specific, I will avoid, but I'll give you a pointer, Sajal, and you already know this, but for the benefit of the audience. Whenever passion and logic clash, as an investor, better to stay away from it. Because the guy who's being passionate has enough money and patience to wait for even 20, 30, 40 years. You as an investor just don't have it. Admit that, understand that, play to your strengths, don't play to others' strengths.
Yeah, definitely. I think if I can take the liberty of just adding, the references behind that commentary from Aditya, it's Kiran Shaw's, the passion and the drive to invest more into Bicara, and just do something which is out of the space that no one else has done, and there is nothing wrong in it, that passion, because someone has to make India proud as well. At the end of the day, आप वो कब तक वही copycat, how long can you continue with that mode? But shareholders may not be having that patience and commitment, or the conviction. And so one example is that, and the other one is Glenn Saldana, the Glenmark management. They have a very similar sort of DNA, and even some of the other management. So that's where I appreciate Dilip Sangvi, the Sun Pharma promoter, because he separated Spark. Now, as a shareholder, I can avoid investing into Spark, and I've got no exposure, and I never will, because I don't like playing that 0 or 1 game, because majority of the time you will get 0. You may not get a 1 in your lifetime. So if you are buying that kind of a business, make sure you are buying for the next 4 generations. And and there are other as well. There's going on your Pharma example we use. So everyone has got this ambition to get the next NCE out and into this US market. It's not easy. Um, so
So
that's
I will
that's
I
all
will
I would
add
like
I
to
will
say.
add one thing, Sajal, right here. 2018 it was. Dr. Reddy's stock price was, and this is history, so I can talk about it. It's not an opinion; these are facts. So Dr. Reddy's stock price was 1700 or 1600 or 1800 in that range. Um, and it was at that point in time run by the two owners and the promoters, which is the Mr. Prasad and Mr. Reddy himself. Uh, and then they hired this guy called Erez Israeli. He's ex Teva, and they told him, "You run my business." The first thing Erez Israeli came and did was all the NCE assets that they had. Dr. Reddy's has had a bunch of NCE assets. For those who don't know enough history, 2002, when none of the Indian pharma companies are even thinking about an NCE asset, 2002, Dr. Reddy's R&D as a percentage of their total sales was about 14%, 1-4, because they were spending R&D dollars behind an innovator asset called Balaglitazar, which never saw the day of light. Obviously, the asset failed. And since then, they have been burning money on innovation assets. So the moment they hired Erez Israeli came. He's the current CEO, by the way, but he came in 2017-18. Uh, the moment he came, the first statement he made on the con call, which made me immediately pack up my bags and go to Hyderabad to meet him, was that the entire world is looking to invest in India, and we as Dr. Reddy's or as a company have been investing outside India. And what he did was that he immediately not shelved, he outlicensed most of the innovator assets that were under development, so that in future they only get royalties if those assets move ahead, otherwise it's zero. And he shelved many other programs in NCE where there was no future, according to him. He also reduced significant capital allocation to US generic business, and he increased capital allocation to the Indian branded businesses, and the India, Russia, they have a bunch of branded businesses. So he increased capital allocation to those markets. And from that day to today, the stock is already like 2.5 times or whatever, uh, while the other companies may not have done as much. The fact is that if you if as sometimes as an insider you get so passionate about a cause, and because you're a wealthy rich man, that cause becomes more important than the money. But as investors, honestly, we don't really care about the cause, right? We actually care about the cash. And that is the dichotomy here, really. I mean, the pursuits of a Biocon or a Glenmark or a Suven or a Spark are very, very novel pursuits. These are great things that they're trying to achieve. And if they do achieve it ever in their lifetimes, it will be awesome for them and awesome for us. Uh, it's just not the same for an investor. And you have to accept that. Okay. So acceptance of the fact that I am an investor, I am more like a vulture, I am more opportunistic. I will come, I will sit, I will get my pound of flesh, and I will fly away. You know, now you can get your pound of flesh for 10, 20, 30 years. Nobody's stopping you to do that. And you can get your pound of flesh in 2 years. That is also okay. Uh, so we have to understand what we are in the market for. Are we there to pick great businesses at any value? Are you there to pick great causes at any price? Or are you there to just make a reasonable return on your capital? Some of these will overlap at some points in time. Some of these will not overlap at some points in time. So you have to make your own decisions. I don't know if that made sense, but I just thought I would add that.
No, no, great point there. Exactly. Why take shareholders along with you? I mean, follow this Mr. Dilip Sanghvi's model, na? Demerge it at least. So that's why and that's the reason I tweeted on Glenmark Life Sciences. Na, see the reason they are struggling with CDMO has also got to do with this NC obsession that the parent has. Somewhere the innovators will be very skeptical, right, in sharing their IP, because the group is obsessed with NC. If they sell this 50% controlling stake in Glenmark Life, what happens with the Glenmark Pharma? Think about it. They get a large cash, they can deleverage their balance sheet, the related party concern goes away, and more importantly, the child Glenmark Life can scale up the CDMO because they've got net cash on books already. It's a win-win, na? That's exactly what I was trying to highlight in that long tweet the other day. I think given the time, we should just discuss this Mankind Pharma. यार बड़ा hype है और IPO valuation I think is again, why would a promoter offer for sale at a discount? I mean, why would anyone do that? But what does that mean to the peer group, which is the other comparable space? Again, there are very few like for like strictly because Mankind is 100% India, so Eris is 100% India, and Jacksonpal Pharma is 100% India. Jacksonpal I know is about 3 times sales with 100 crore plus net cash on books. Eris, I think I don't remember the exact valuation, is at 5 6 times sale. Maybe they do have. Let me just quickly check what's the valuation. So roughly 8,500 on the screen is saying as the enterprise value against 1,500. So yeah, about 5 to 6x price to sales for Eris. Mankind, I think, is even at a premium to Eris. So how does this whole space looks like? And even if you get the lottery ticket in the IPO, I mean, you will only get the peanuts, and then the institutions will start chasing for allocation when the stock lists, and there will be, of course, an upward price surge after the listing and the new price discovery after the IPO. Will that game will definitely play out? But at some point in time, the stock will start stagnating when the institutions are done and dusted with their allocation. And if you buy at that point, if you don't exit, so if you get the IPO allocation and you can play with a trailing stop loss for the next month, possibly two, while the institutions will be, filling their allocation quota because the stock will run up like Gland Pharma. It did well after the IPO listing, right? So, but if you got the IPO allocation, if you sold after a month or 2 or 3 months, you made good money. Even if you bought Gland Pharma on day one, first day, first show, and you held it for 3 months or whatever, you made good money. But if you bought it at 18x price to sales, you deserve that treatment that you got ultimately, right? Something similar will also happen in Mankind. I expect the IPO, regardless of what I say about IPO, it will be oversubscribed क्योंकि मेरी तो कोई सुनेगा नहीं क्योंकि मोमेंटम है, पैसा तो जल्दी बनाना है ना, पैसा ज्यादा नहीं बनाना है, जल्दी से बनाना है, overnight. So everyone will invest in IPO, everyone will chase. Then on listing, there will be more momentum chasing, and then ultimately, at some point in time, market will say enough is enough on the valuation side. It happened with Zomato, it happened with Nika, it happens with everything. Very few. The tail event is the DMart, but that's a tail event. How many DMarts have been successfully listed after IPO? They created wealth. So, long story short, what's your view on Mankind IPO, Aditya bhai?
Uh, I think it's a fairly priced IPO. See, one, Mankind is 98% domestic, but they have started investing in export, which is why that 2% is actually export. And that export will grow much faster because it's on a smaller base and there is investments going behind it. So, unrelated diversification, I would call it. Uh, to 67% of their domestic business, as I understand it, is acute, which is more in line with your Indoco and your Alchem and your FDC, and less in line with your Torrents and RSS, of the world. Um, the multiple that it's coming at, I think it's coming ahead of Alchem. It's coming behind Torrent. So I think it's a fairly priced IPO. And there's not much on the table for the investors, but as you said, some momentum chasing by institutions cannot be ruled out because there are only so few, pure play domestic assets available or largely domestic assets available. So there might be some chasing there, but yeah, I mean, I'm not for or against it, to be honest. I feel there will be some listing gains, maybe, possibly. That's a guess, to be honest, given the structure of the company and the structure of the mutual fund market today. It's a 43,000 crore market cap company. So when it lists, there is liquidity and there is positioning that can be done there. Beyond that, I don't really have much of a view on that.
Hmm. What is the current sale? Is it about 15,000 crore? Mankind?
Sales? No, 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 no. Mankind
Mm-hmm.
sales is about seven-ish, between 6 and 7,000.
6 and 7. So, if the asking valuation is about 45,000 crore, if I'm not
43,
mistaken,
43.
33. So 43 mota moti, six times price to sales, is it?
Yeah, 6 to 7.
I 6 to 7. I think book value 7 times price to book, hai na? Roughly.
Book value I didn't check. I have to check.
I think service roughly 7 times. है. So हाँ premium तो होगा which is expected. Why would you come out with an IPO और कोई discount में क्यों देगा IPO?
Yeah, yeah, yeah.
But what does that mean for the other comparable players? So FDC we saw some I read it as the mankind effect. Uh,
Yeah,
sudden
so I
sudden burst
so,
in
so look,
volumes.
you can't. I mean, at least I can't explain the movement in stocks here because you don't know what drove the FDC rally and why that rally did not come in some of the other branded generic companies, right? So uh, difficult to say. Uh, but yeah, an IPO of this size, of the kind of and the business mix that Mankind offers, will have a rub-off effect on branded generics eventually, because people will start comparing them to others and say, if this is available at this value, why is this available at that value? And there will be some rub-off effect, no doubt, on the majorly domestic franchisees, um, which includes some of the names that we took. Uh, but yeah, I mean, that's a more of wait and watch. I don't know why FDC did what it did last trading session, but Mankind was not an unknown IPO, Sajal bhai. I mean, it was a known IPO for a very long time. Uh,
Hmm.
it's just that it's happening now. Um, so difficult to know, yeah, what happened there, to be honest.
हम्म। ठीक है तो बंद करें हो गया ना प्रिंस इज देयर एनी अदर
Yeah,
थिंग
yeah.
क्वेश्चन
All the questions were taken. Yeah.
ओके ओके सो thanks everyone and just to repeat क्योंकि I've discussed many stocks this is just a gupshup platform as I said nothing should be taken seriously I'm an independent person not associated with any investment group or fund management right no aspiration to set any sort of advisory or stuff so I was just a gupshup time pass we didn't discuss much about some of the other stocks like Aarti Pharma Labs, Dishman Garbage, but I think Aarti Pharma Labs looks interesting optically because of the valuations, but because they're not doing the investor engagement, they're not talking with the investors, and I don't know if there are any plans to do investor call, etc. So it would be difficult to opine on Aarti Pharma Labs at this point in time. I keep getting your DMs and your requests, but unless I engage with the management and talk to them, I cannot opine much. So I'm in as much darkness as you are. But optically, the valuations look relatively cheap. Given the scale up that they have done over the last 10 years, 21% CAGR is seriously good. But hopefully they will engage with the investors at some point. Okay, so on that basis, I think we can say goodbye. And again, final disclaimer: I mean, there is no investment advisory here. Everyone has got biases and vested interest, and most of the time we are wrong anyway. So when we do the next spaces, whatever we have said in this spaces will be null and void, and we'll just make a U-turn again, right? Like we normally do. I see Tariq has just joined, and he may be having some view on any of these talks. I'm not sure what point you joined. He's just dropped. He didn't like my comment. So anyway, so I think we can wrap up then.
All right. Thank you. Thank you so
Yeah,
much for your time, sir.
yeah, guys.
And
The standard disclaimer from me as well. All that we discussed was purely on an education basis. I manage funds for Incred Healthcare PMS, and uh, any stock names that I took or anything that I said, you should assume that it was a biased view, and it was just an opinion. You should consult your financial advisor before taking any investing decisions.
all right. Tar, sir, we see Tar again. So Tar, if you're free, we can like you can join as a speaker and we can have some discussion on Aarti Pharma if you like. Sir, can you confirm from a smiley whether you're joining, or shall we wrap it up for the day?
Nice, he's dropped.
Maybe.
Okay,
Maybe
so
some
yeah,
Twitter issues, sir. Yeah. And the
yeah,
guys,
yeah.
once again, as like rightly said by Sajal sir and Aditya sir, purely educational spaces. Starting point for you guys to dig deeper and do your study. And please do come with the nice set of questions next time also. And the session is recorded. Apologies for them, those who are not able to hear the speakers properly. We will try to upload it as soon as it is convenient for us, and surely you can listen to the conversation. It was clear on our part, so hopefully the audio in the recording would be fine, and surely you can listen to that.
Good night, everyone.
Yep. Bye,